thing that even you guys who are young in the firm, your reputations with each other, even the dopey guy sitting next to you, roll the clock forward 25 years, and these are going to be the most influential people in the world, whether they stay at Goldman or go somewhere else, go into government or just another firm or create a private equity shop, whatever. These are going to be the most influential people, and their impression of you is going to be fixed based upon how you act today. So guess what? Act well.
Are we going to need the same type of people anytime in the near future to face the same type of things? In other words, how do you feel about the market right now? AI, private credit?
It was kind of a bit fragile before all this started, and so we're coming into it. I think this macro kind of event will, look, things can go off the rail. A lot of stuff could go wrong and get worse. Oil could become a bigger deal, longer, straits close. My base case is that this will sort out on a macro basis, and then we'll have to deal with some of the stuff. There's always anxiety. We look for it, wall of worry. I'm basically very, very positive.
Good morning, bro.
Oh, on the market, sure.
How you doing
but the
today,
one
bro?
thing that you have to realize is, you need a kind of a cleaning out. It's like The Godfather. You have to have a war every 10 years to clean out the grudges. I think in markets, there hasn't been a problem or a reckoning in a long time. So the people had to have lost discipline since the last time that there was one of these things. Usually it happens every 5 or 6 years. It hasn't happened for more than 15 years. And so you think about the lack of discipline, money going in the wrong place. No one's had to really mark-to-market stuff. Look, we've just had one of the best, we're still near the highs of the equity market. It's been the best financing market, and inventory is still, of illiquids are still building up on balance sheets and supposedly can't be sold. At some point, there'll have to be a forced reckoning. Hopefully it won't happen. Hopefully it won't happen later this afternoon or tomorrow. But that's a real cause of worry. But having said that, it seems like a lot of tailwinds. The economy is doing well. Inflation is kind of tamer, and we're going to lower rates into a pretty good GDP. I realize that there's a lot of polarization because the economy isn't doing a very good. It's doing a good job creating wealth, not necessarily allocating that wealth according to the values, and so you're getting a polarized society, and that's bad. But overall, a lot of tailwinds, and a lot of, we're just about to come up to more fiscal stimulus. And by the way, fiscal stimulus coming from hyperscalers who are investing hundreds of billions of dollars, which is also kind of going to be a stimulus to the market.
What do you do with your own money? You're a risk manager. You think of these things from all these perspectives. You position your own.
I do.
You're worried that this is long in the tooth.
That's a good way of doing it. You should always ask people, what do you think, and then following up with, what are you doing? Because people sometimes say, not because they're lying, but because they get confused themselves. Because I'm a worrier, and so if you ask me what do I think, I'll give you all my worries. But if you ask me what I'm doing, I'm all in equities.
677.2 entry.
I'm in risky assets, and of course, very, very responsive. If I hear a twig crackle in the background, I jump 5 feet into the air and I want to do something. And I think that that's a way to be positioned. It seems to me we're overdue for something. I'm not sure the direction, but inevitably it will come. But I don't see it happening tomorrow or the day after tomorrow. Next week is another thing.
What about the Federal Reserve?
677.2 entry.
With the changes that have taken place there, is this something you pay much attention to?
In terms of what they're doing, or the assault on the Federal Reserve?
The assault on the Federal Reserve, what comes next?
I think it's crazy. I think the Federal Reserve we're a debtor nation. We need creditors to lend us money all the time.
A weekly position.
U.S. can't default by not paying. We'll never default specifically because we print dollars. We can always return all the dollars we printed. The question for our creditors is, what is that dollar going to be worth?
To be honest with you, Todd,
if they think that the dollar is going to be inflated or diminished in terms of its purchasing power, they'll either require a much higher interest rate or they won't lend to us at all. The guardian of the integrity of the dollar is the Fed. And so if I'm a creditor, I want a Fed that's independent, high integrity, that honors its mandate, allow the currency to be inflated, i.e. to default through inflation. And so
trade
undermine
uncertainty.
the importance of the Fed is sending the wrong message to our creditors. So I would, you know, I wouldn't be doing that, and that's crazy for the people who are managing our debt to be undermining the importance and the influence of the Federal Reserve on policy, because the creditors look to the Fed as the guardian of their interests.
One of your predecessors, John Whitehead, was at Normandy. Not only was he at Normandy, he was one of the first people to get there to organize things, so he had no cover. So you come from good stock.
He was a junior officer on one of the landing craft, and when I made that comment,
you were thinking about him.
No, I was thinking about him. Yeah. He sent me a very nice note that was terrific. You know, when you talk to when you talk to people, and you know what they live through.
Yep.
You know,
it informed the way you are, which I appreciate. Well, thank you, and thank you. I'd like to talk more about this, and you're always welcome. You know that.
Is that right?
Always.
Fantastic.
All right.
Thank you.
Make sure you join us. Yeah, this is me. Join us tomorrow. Squawk on the Street's coming up right now.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Futures eyeing roughly 1% declines as the U.S. and Israel strike Iran for a third day. Defense and energy names are higher. Some travel stocks fall. Oil goes to 72, although off the highs of last night, and the 10 years at 401. We begin with the U.S. and Israel extending their attacks on Iran, and as Tehran and its proxies retaliate by firing missiles at U.S. military targets, Israel and Arab states. Last hour, the Pentagon said it's engaging in a major combat operation, not an overnight offensive. Energy prices, as we said, spiking, stocks falling around the globe in reaction to this widening Mideast conflict. Jim, sounds like you think maybe these declines are a little too moderate, curious in a curious way?
Yeah, well, I mean, it's kind of interesting. I expected the interest rates to go down. There'd be a flight to quality. Instead, rates go higher. When rates go higher, I don't like it. I don't hear a quick way to get oil down. I think it will. I would not own the oil stocks. It's a great time to sell. But, David, when I look at things, I say things weren't so good on Friday. We had a lot of private credit issues, the Blue Owl issues. We had CoreWeave here, and CoreWeave was some sort of a cathartic thing, which basically said, let's find other things to buy.
Yeah.
And overall, it just wasn't a kind of a queasy market based on what we saw, the banks in particular.
Yes.
So I felt that down one, we could have gotten down one without anything happening.
I completely agree. Investors will be focused, as they should be, on the macro events that may occur as a result of this war. There's no doubt, and we'll be focused on it. Obviously, the key one is what you're looking on your screen right now and what impact that will have, more broadly speaking, in terms of that rise in crude. But, Jim, we would have come into this morning as well discussing just what you said.
Yep.
And by the way, there's a lot for investors to deal with right now beyond this war, and there would have been if hostilities did not begin, because of private credit, because of this overall concern, I think, broadly speaking, in terms of just credit, even though we're not seeing software companies not pay back their loans, and AI and what is coming at us this week, and what businesses everybody will believe are being disrupted again. So you overlay the war, the macro events that will be created as a result, or concerns, I should say, with what we're already dealing with. It makes it a difficult market, I would think, to invest in.
I think very much. I mean, Carl, when I go over what I want to buy here, I come back and say, okay, I'll buy healthcare, because healthcare won't get hurt. There are a series of things that NVIDIA has done, that NVIDIA did on Friday night, which were extraordinary, and basically just said, okay, listen, we've got this new chip. It's faster, it's better, cheaper maybe than what Google has. What we now find has been one of the negative theses of against NVIDIA is that both Amazon and Google have a competitive threat when it comes to inference. NVIDIA is the largest stock in the market. It's down big. Like David said, I mean, you're looking at these stocks. These stocks are all in some sort of negative scrum. And I saw Apple down really big. And nothing that's happened is going to make those sales go away.
Yep. We're watching that. I'm just thinking about Mike Mayo's piece on the banks today, Jim, out of Wells. In a blue sky scenario, the biggest global banks, JPM, Goldman, Morgan Stanley, Citi, could aid a modern Middle East financial renaissance. I mean, are you thinking about that kind of opportunity right now?
No, I'm just thinking about what Jamie Dimon will say, which is that, I said there'll be cockroaches, and it looks like the cockroaches are at companies that do private credit. David, when I read the different articles about Blue Owl, I was trying to think this weekend and this morning, what's a way to cast them so I don't think that it's impactful? And I came back with, they just seem a little aggressive and sloppy. And if more money comes in or they sell some properties, and maybe they can, because you can't get out, they're gated, although I think that Craig Packer said, another way to get out, of course, is to get in.
Right.
But look, I came away not reassuring. I couldn't be reassured. And then when I read the article about two guys who borrowed a lot of money and they bought a team, I mean, I don't like that
and
typically.
Lipschutz, right? They say they're over-collateralized in the loans that they've taken in terms of their stock that is backed by that backs those loans of Blue Owl,
right?
With Blue Owl shares, and that has been a focus. But you're right, Jim. Listen. It's funny because those have been the conversations this morning, and you always like to say the long knives are out. That's one of your lines. And man, I mean, they just keep coming, these stories. Maybe a bit of overkill here, but unclear. Well, and that gets back to the overall, Carl mentions the big banks. We're not concerned necessarily about their balance sheets. We're much more so about, well, what lending has taken place here? What does it really look like? We get some details, but not a lot. For example, a key question, well, how much your portfolio is just pay in kind is an important question. How much is simply getting back the securities, just increasing the amount that you're owed as opposed to actually getting an interest payment, for example.
Right, in that particular transaction.
Right, so these are key questions.
Right.
That said, Carl, these software companies that everybody's concerned about, loan to value is certainly a concern if they mark appropriately where they are based on the public comps. But nobody's questioning their ability to repay in the near term.
Anaplan is a fantastic company. Zendesk is not my favorite, but okay. I mean, one of the things that is so difficult for me to understand is if you asked me 3 months ago what private equity firms I would want to be with, 4 months ago, I would say, what, I really like this Vista. This Thoma Bravo, boy, they can handle, they're just dynamite. And yet that's what we're dealing with the after effects of. Two of the great, of the great buyers of enterprise software. But if you believe that enterprise software is going away, and then we had the Dorsey comments really made things very weak. Yet I never felt Dorsey was a good operator. I don't think Square Block XYZ is a good operator. But I would tell you that when I look at these things, people felt that Dorsey was a referendum on enterprise software, and as far as they're concerned, they don't need it.
Right. Well, and on Friday afternoon, before hostilities began, conversation was largely about if the Pentagon can not only kill your contract, but then blacklist you from doing business with any other government vendor. Is Palantir prepared for that? Is a Microsoft prepared for that?
Well, when you read over the letter of Dario's, it didn't read like a declaration of war. To me, David, it looked like a common sense view that they felt was the right thing. I don't think they necessarily felt would then make it so that they'll lose some of the biggest.
No, we're talking, of course, about the Department of Defense, and that's what we still call it because there hasn't been an act of Congress to change the name.
Okay.
Their decision to ban Anthropic, essentially, from government contracts, not just for the DoD or DOW, whatever you want, but for others who provide services to it. And in his letter, Dario said Secretary Hegseth has implied this designation would restrict anyone who does business with the military from doing business with Anthropic. He says they don't have the statutory authority to back up that statement. So this is a serious dispute here that, like so many others, will end up in the courts.
Especially when you're in the midst of these fundraisers. So Anthropic got its funds.
Yes, it did.
OpenAI did get the funds. That was very, very bullish. Did they get them from who you want them to? It doesn't matter. They got them. But it is so in flux that when I came in, I saw us down 1%. I said, well, how about the percent for Iran?
Right. Yes, speaking of which, let's get Damon Javers this morning. More on the White House and the Mideast conflict. Damon, we did hear from Secretary Hegseth and General Kane not too long ago.
Yeah, that's exactly right, Carl. President Trump's top civilian defense official, Pete Hegseth, making the case for the war in Iran this morning in a Pentagon press briefing, putting the conflict in the context of more than 40 years of conflict between the United States and Iran, and arguing that the war does not violate the president's pledge to avoid forever wars in the Middle East.
This is not Iraq. This is not endless. I was there for both. Our generation knows better, and so does this president. He called the last 20 years of nation-building wars dumb, and he's right. This is the opposite. This operation is a clear, devastating, decisive mission.
Meanwhile, President Trump has not spoken live directly to the American people since launching the attacks on Friday, but he did issue 2 statements on tape on social media, and in a message on Sunday night, the president prepared the nation for further American casualties as major combat operations continue in Iran.
Sadly, there will likely be more. Before it ends, that's the way it is. Likely be more, but we'll do everything possible where that won't be the case. But America will avenge their deaths and deliver the most punishing blow to the terrorists who have waged war against basically civilization.
And guys, we learned this morning that 4 U.S. service members have died so far in Iranian attacks, 3 killed over the weekend and 1 succumbing to wounds received this morning. And the Pentagon confirmed that 3 U.S. fighter jets have been shot down, not apparently by Iranian fire, they said. It's a possible friendly fire incident involving an allied nation, but the air crews were able to eject safely, and they are reported to be in stable condition. Guys, back over to you.
Amy, let me just ask you, while you're here, I don't want to conflate oil with the
Shout out to the team. Good morning to the team. Grateful day to the team. Shout out to you, Miss Mary, for joining us on Kick as well. Also, Tess Timothy, thank you for joining us on Kick. Todd is in the building. Quiet Soul is in the building. Nkosi is in the building. Guys, I was telling Todd earlier, I don't even think I'm going to trade today. I do have some plans. Let me go ahead and show you what my plans are real quick here.
Of all time. The Saudis. Silver Lake is Carl, for the market?
Abu Dhabi National Oil did delay a bond sale.
Okay, so my plans, I still went and created some plans. My plans is a call at the 682 level. I'm taking that to 683.5, then possibly to 686, and then maybe even to 688. 681 strike, 682.10 entry, 683.4 first profit target, 686 second profit target, possibly 688. For the downside, looking for an entry for a put at 677 with a 678 strike, 677.2 entry. Looking for a first profit target of 675 and then possibly 673.5. So that is what I'm looking at on the downside. Also at that 673.5 area, it's very, very important. It's really, I'm going to say 674. It's really 674, that area. We get below that, we are red for the year. I repeat, if we get below 674, we are red for the year. This will create a whole new game plan. So because today is filled with so much uncertainty, I don't even plan to trade today. It's not saying that there's not going to be opportunities, but I'm not going to put myself at risk. You know, Kelsey said I caught myself almost into the profanity-laced post. It keeps me baffled. I don't plan on trading either. Yeah, I know, right? I just have to see. It's a lot of uncertain times, uncertainty. Leave that which doubt for that which makes you don't. So I'm full of doubt. I have no idea. We don't predict, we just react. So I'd rather see what the market is going to do and then see where the opportunities lie and then possibly attack. But right now, no, I don't plan to do anything. Not a thing. Not right now. Not right now. This is definitely a hurry up and wait situation for me, that is. Definitely appreciate you guys tuning in. Definitely appreciate you guys hitting the like button. But today is definitely a observe. It's unusual times. Again, key area. We get below the 674. We are red for the year. In fact, I need to adjust that line just a little bit. 674.6. We are red for the year. A lot going on today. A lot of unexpectancy. So with that, I'm going to be patient. Let the market settle. Try to get a little bit of normalcy back. And then see what we have there. We do have a controlled selling algo coming into market open. So, I mean, it's only fair that we still call out the algos because it is what it is. As we are making our way towards market open in about 10 minutes. But I just wanted to let the team know I'm present, but I will not be trading today. I'll be on the sidelines wondering, did anybody else just get this false print all the way back to the 686? And again, for a call, I do like that profit target area of 686. Just don't like anything that's happened. I haven't traded in this times before, so I have no problem gaining some experience without putting my money at risk. Yes, sir. And Cozy caught it too. Yeah, that false print. Amazing. Again, times of uncertainty, so I'm going to be patient. trade based upon your level of understanding, upon your level of comfort. I don't have no understanding of this. I don't understand. I'm baffled. This is a 10-point drop from Friday's close to the low of this morning. We closed Friday at 685. Today, pre-market, we touched 674. Okay, bounce back to 680, almost 681, and now we're back down to 678. Market is all over the place, so I'm definitely going to be patient. Just want to bring that and point that out to you guys.
Let's get to a mad dash as we start off the week. About 8 minutes before we get started with trading. Yeah, what's up?
I hesitate to talk about something that would have been something we would have already talked about on Friday, given the events. But you know what? People are cheering that Netflix walked away, and there's a JP Morgan note that suddenly just talks about, hey, strong franchise, the ad business is undeveloped. And I say to myself, wow, did the shareholder base or did hate it, and did new people salivate to get in? And it's a absolutely terrific investment if you do think that, well, they were going to overstretch their balance sheet and they didn't need Warner.
Yeah, I mean, Netflix would have gone to 3.5, 4 times leverage as well. It wasn't as though they weren't going to take on a significant amount of debt to finance the purchase of Warner Brothers. That's no longer happening. We've already seen the reaction in the handful of days leading up to their decision to drop out, of course, Jim, because the expectation was perhaps that would happen.
Right.
And now it's Paramount's, and they're having an investor day at Paramount, of course, where they're going through a lot of the financials. The debt loads are potentially staggering. Now, they say, of course, in delivering on the $6 billion in synergies that will be available to them at Paramount when they close the transaction with Warner Brothers, they'll be able to bring their leverage ratio down substantially. Right. But they will start as a company that's about 7 times levered in these credit markets, which are kind of worrisome right now, right?
Isn't it ironic that the enterprise software stocks, and of course the enterprise software take private stocks, aren't nearly as levered after they just didn't put a lot of debt on them like I thought they would versus Paramount?
Yeah, I mean, by the way, to be fair, Paramount's also going to have an enormous amount of equity, right? So they're buying Warner Brothers for $81 billion in equity value. It's $110 billion enterprise value. As we know, $54 billion in debt being borrowed from Bank of America, Citi, Apollo, and a huge equity check from Larry Ellison and Redbird, and potentially a lot of their partners up to as much as $47 billion. And Netflix walks away, and you get this response.
Well,
we'll see.
Okay, let me tell you, this stock is down. Now, it did jump. I mean, when you were talking about it, it started jumping. And yeah. I say that if you wanted to buy something and you believe that this is a short-term thing, there's no better place to start than Netflix. Right. I think it's a terrific situation. People stay at home. It's about time what you do. And boom, I'd say buy it.
Okay. We got a lot more, of course, for you, a lot more coverage of broader markets and the credit markets as well. By the way, don't forget, you can catch us anytime, anywhere. Listen to and follow the Squawk on the Street Opening Bell podcast. Opening Bell, less than 6 minutes away.
Welcome back. We head into the first trading session of March. Dow did post that 10th consecutive month of gains for the first time going back to 2018. NASDAQ and S&P coming off their worst monthly performance since March of last year. Meantime, gold did rise above 5,400 an ounce earlier today in reaction to the conflict in the Middle East. Precious metals now in the midst of an 8-month win streak, Jim. Still plenty of targets that are north of 6K.
Yeah, look, I am a huge gold bug. I've always have been. I think 5 to 10% of your money can be in gold. My friend Larry Williams, who's one of the great historians about the market, is suggesting that maybe Bitcoin is based. I'm not against that. I think Bitcoin, there was a huge amount of money coming out of Bitcoin to gold. Bitcoin, a lot of people are saying, hold on, what is Bitcoin still doing at 66? Maybe it's basing. Now, I know this is talking about what younger people like to invest in. Young people have a lot of money. And I think that it's okay to diversify a little bit away. It's had such a run. I can't come in on top of this and say, hey, buy gold. David, I think the people who are buying gold here may have missed the gold truck.
You do?
Well, I think that there's other things to buy at this point.
I mean, a war to which we don't know the outcome at this point, or at least we don't know the duration. Wouldn't that be exactly the time you want to own gold?
Well, I'm not. I want to continue to own gold, but I am saying I've been watching this Bitcoin stabilize, and I am sure that there are people who say, wait a second, maybe this at some point should be a storehold of value. At some point. What has it been so far? Nothing.
Well, versus the S&P over 5 years, the returns are about half of the S&Ps.
Wow. Isn't that interesting? I mean, there are people, the other day I said, well, I like NVIDIA. And someone said, well, that's almost as good as Bitcoin. I said, no,
not quite.
No, it's better.
It's a lot better.
Yeah, it's a lot better.
Yeah.
And I like NVIDIA very much for some of the reasons that they're using their money to be able to invest. And I like the way they do it.
We'll get to the Lumentum and Coherent investments from NVIDIA on the other side of the bell, Carl. Both stocks look like they will be up as a result of that.
Also, Morgan Stanley Tech this week. We're going to get a lot of tech news over the course of the week.
I think that normally I would have looked at tech to buy on today. I think the Magnificent Seven could do okay, but the problem is that tech is where the turmoil is. I do think that when you go back to the war, the Gulf War in 1991, you got an exquisite moment to sell the oil stuff. It wouldn't surprise me, and I would suggest selling half your oil stuff. Sell half, because oil is up temporarily, and today it's a bit of an extreme moment.
Yeah, Brent got above 80 for a short time last night. There's the opening bell on the CNBC Real-Time Exchange. And the big board, it's Atlanta World Cup Host Committee. Atlanta hosts 8 FIFA soccer games this summer. Georgia's Governor Brian Kemp, Atlanta Mayor Andre Dickens doing the honors. At the NASDAQ, it's Axogen, a medical technology company focused on nerve repair. I mean, we will be asking questions, Jim, about international tourism and whether that's impacted if this goes on for a while.
I think that when I look at Norwegian already, they're talking about how things weren't that good going into it. David, when I look at what's happened with the oil, with the infrastructure of oil, everyone's panicking and buying. Again, when you have panic buy of oil, it has historically not been great. It's not been a good investment.
It's not been a time to, yeah.
It's been bad. I don't think this is different. By the way, natural gas, it doesn't really impact us because we have a huge amount of natural gas. And I'm glad to see that even though there's cold weather in the Northeast, that natural gas hasn't spiked because natural gas is very important.
Henry Hub is one thing. It's not the same story in Europe.
No, and they could have locked in. I mean, I think Europe is so suicidal. I cannot believe it. Chinese in, they didn't take the long contracts for us. One of the great stories, sadly, is that they don't seem to have any survival instincts when it comes to the great powers.
We do know that Qatar Energy is stopping LNG. That's about 20% right there. We'll watch the Straits of Hormuz. We had Maersk halt some shipments. We had Hapag-Lloyd introduce what they're calling the war risk surcharge.
Yeah, these things, again, I mean, the impact that you have to think about is inflation. Carl, on Friday, you talked to me about a number of of inputs that were going higher. But the one thing that what I was confident about was that oil would be able to come down.
And then I said, what about Iran? We said that on Friday.
Was great. That was the inquiry. And David, you know that a lot of these things that you talk about when it comes to credit, we didn't even talk about the idea that rates won't come down the way we thought, given the fact that it would be very hard for a Federal Reserve to cut rates in this environment.
True. I mean, we did see what we thought was a bit of a flight to safety late last week, right, where the 10-year did fall briefly below that 4% mark. Now, as you see, a bit above it, which was interesting to note.
Right.
But again, you know, we're going to keep coming back to credit for obvious reasons, and both Jim and Carl mentioned, of course, the performance of the banks on Friday. The follow-through has continued to be negative. We are looking forward to hearing Leslie Picker's interview with Chairman and CEO of J.P. Morgan, Jamie Dimon, a little later in our programming day here at CNBC. But J.P. Morgan's down another 2%. Bank of America down 2, Citi down 3, and then of course moving on. I haven't even looked, so let me just take a look here. Yeah, I mean continued weakness, not that much, but in the alternative asset managers, whether it's Blackstone, Apollo, KKR, Blue Owl, or Ares, for example, all of which are down anywhere from the high 20s to low 30% for the year.
Let me ask you, do you think
a downgrade this morning, guys, as you noted, by Barclays of Blue Owl.
Right.
And they're pointing to, you know, what a lot of others have been talking about as well, which is just the concern around business development corporations and their ability to either garner new funds or, even more importantly, what the outflows look like. So inflows started to slow. February, which, by the way, we're not even talking about AI-related headlines, meaning the worries about software, they point out, down again, and redemption requests picking up. That doesn't necessarily point to a great near-term picture. And that's where some of the concerns are about liquidity and what selling has to be done. You sell your good stuff, Carl, but what are you leaving behind if you actually have to sell more?
Of course, Deutsche cut last week, and they went from 15 to 10. And part of that, additionally, was maybe you can count on a longer runway when it comes to selling to 401ks.
Right, well, I remember when these were the premier institutions, and David Blackstone, KKR. These are companies that had a gigantic premium, PE multiple premium, to the banks that you just mentioned. People just said, well, this is where people want to go. This is where the smart money's going. This is where the premium belonged. And it's
come out. The premiums come out. Now, of course, it'll be, again, always want to listen to Jamie Dimon, but he's been firing against private credit to a certain extent for quite some time. Even though they make a lot of money with what I call the back leverage to many of these BDCs and firms, nonetheless, they have been a competitor or potentially a competitor as well in certain markets, Carl. So it'll be interesting to see if there are any more cockroaches.
Yes, and that's why Blankfein's comments are additionally interesting, having been on a bit of a tour for his new book, where he did say over the weekend that when it comes to private credit, he thinks we are due for a reckoning. This is what he said on Squawk this morning.
There's always anxiety. We look for, wall of worry. I'm basically very, very positive.
You are?
On the market, sure. But the one thing that you have to realize is, you need a kind of a cleaning out. It's like The Godfather, you have to have a war every 10 years to clean out the grudges. I think in markets, there hasn't been a problem or a reckoning in a long time. So the people had to have lost discipline since the last time that there was one of these things. Usually it happens every 5 or 6 years. It hasn't happened for more than 15 years.
Part of his comments, David, over the weekend were thinking back to the housing crisis, and when people said there was not that much risk, they weren't considering things like Iceland, for example. That's the example he gave.
Yeah, or Norway, where I ended up going for my documentary. Narvik, Norway, as you remember it, right? By the way, Goldman Sachs is right in the middle of all of that in terms of CDOs, CDO squared, synthetic CDOs, and really were they betting against their clients, all things that through the years I tried to take up with Mr. Blankfein with limited success, but the lack of transparency always becomes an issue in markets like perhaps the one we're in. But again, I want to come back to the broader idea because it's so people have been so focused on the ability of these software companies to repay. That's not an issue.
No.
They're fine right now in terms of repaying their loans. Their terminal multiples may be impacted because the recurring revenue model may be at stake, and therefore where are these things being marked on private equity firms' balance sheets, and therefore what does the loan to value look like? But kind of this is where it all started, and yet it's the other things that have been popping up, Carl, that have been worrying people in terms of other areas of the credit markets.
I think that what's amazing is that we can all be negative, and then the buyers don't even wait. They come back to Micron. They see that the premium multiple is so ridiculous. The number, I mean, it's so low. Okay, so low because we're talking about numbers for Micron that maybe for next year we're talking about it sells it. I'm almost. I have to say it, okay? There's UBS that is talking about them making $85 a share, and the stock is at $417. If you think they're going to make that, and they certainly can, well, yes, you'd use today's strength to buy more strength. And I think people have to recognize that the safe haven today are the DRAMs, because their prices keep going higher. And that is a sign of bullishness, actually, because people don't think, well, wait a second, you know that they won't be able to put through price increases. They will. Yeah,
that was a big part of the debate last week, that somehow Jensen or somebody else would say something about chip efficiency that would put a chink in the high bandwidth memory's armor.
Well, and he did. He put this arrangement with Grok for $20 billion.
Q.
And yes.
GROQ.
Not the Elon Musk Grok.
No,
correct.
But he's come up with a chip that, when you look at the benchmarking that people are giving you, like Gerstner, altimeter, it's amazing. What you're seeing is literally a chip that is faster, better than the chip that Google has.
All the Grok people, this was the story I broke on Christmas Eve.
Yeah, right.
Are over at NVIDIA, all of them, including the company's founder, Grok's founder.
Who was
Jonathan
where
Ross.
before he was at Google?
Well, he was at Google, right? He was one of the creators of the TPU there. By the way, speaking of NVIDIA, guys, we should mention Lumentum and Coherent. These were dual announcements from NVIDIA in which it said it has strategic partnerships to develop optics technology to scale next generation data center architecture. Similar announcements with both companies that also do somewhat similar things and are both up. I saw it's $2 billion is the investment from NVIDIA into Lumentum and Coherent. I did see some of the numbers on Coherent. I think 7.79 million shares at $256.30. I'm not sure I saw the same for Lumentum, but you get the idea here.
Yeah, and
let's take a look at both of those stocks, because Coherent is up about 10% on this announcement, and Lumentum also higher. Non-exclusive agreement.
I should be saying it was
multi-billion-dollar purchase commitment and future access and capacity rights for advanced laser and optical networking products. Maybe we'll put the stock prices up.
People love it, and they also it was SemiAnalysis that said that this Grok is revolutionary, and it's altimeter that talks about how cheap NVIDIA produces things. How smart it is, and I think that this is all people. NVIDIA, maybe they can take Google. They've got OpenAI, and they're doing these investments that people like.
Yeah,
they like them.
They keep doing a lot of them. I mean, when you generate that kind of free cash flow, I guess you got plenty of places to put it. So.
Yeah, NVIDIA, the best Dow stock at the moment.
Right.
Some of the worst, Jim, are, I guess you could say, rate-related. Sherwin-Williams, Depot, Disney on, I guess you would worry about tourism trends.
Tourism does not do well in this environment. Also, gasoline.
I would say, Jim, on levels overall, we did not even get close to the 67.80 that we've bottomed at, 4 times since Thanksgiving?
Well, again, I think that it's testament to something Lloyd said, which is that the equity markets are still the best. Greg Abel, the note from Berkshire, equity markets are still the best. But I just think it's a long day. It could be a long war.
A long 4 weeks, if that's what the number is.
I'm not anxious to buy anything that I think is economically sensitive. Doesn't make sense to me. And the question is NVIDIA economically sensitive? And I think that NVIDIA is trying to take the share back from Google. mean, Google and Amazon both are saying, listen, our chips are better than anything, but they're inference chips, and Grok is inference.
Yes, it's right. It's an acceleration of that, making things more quick and efficient, and everything else that comes along with that.
And semi-analysis is independent, and they say that it's faster, better.
Meantime, oil is back below 72. Let's get a closer look at energy and the Mideast conflict. Brian Sullivan, of course, at HQ. Great discussion this morning on Squawk, Brian, as we're trying to watch both the impacts on production and some choke points, too.
Yeah, and the story continues to evolve. Carl, good morning, everybody. Listen, oil obviously getting all the focus as it should. Oil is up, although not up as much as some of the more fearful projections that were out there. Some oil stocks are up a couple of percent, but I want to pivot very quickly because the story today has quickly evolved into natural gas. And here's why. Iranian drones hitting Qatar Energy. Now, Qatar is a country that is the largest liquefied natural gas producer in the world. And all of it goes through the Strait of Hormuz. And about 2 hours ago, Qatar's state-owned energy company, Qatar Energy, saying that as of right now, and we don't know how long this will last, and that is critical. We don't know how long it will last, but right now, all LNG production is offline. So effectively, 20 to 30% of the world's liquefied natural gas production, guys, is offline as of now. Will it last an hour, a day, a week? We don't know, but there's your story to watch. There are U.S. stock impacts as well. Look at Cheniere Energy, ticker LNG. Look at Venture Global. They also had earnings out this morning, ticker VG. Those stocks are up. In fact, Venture Global stock is up nearly 20%. Some of that could be earnings. But again, if you're taking Qatar Energy offline, then U.S. cargoes from Corpus Christi or from Calcasieu Paris, Louisiana, Houston, wherever it may come from, those cargoes are now worth a lot more money. Venture Global is up 17.5%. So obviously oil is the story. Natural gas continues to be the story. And when we talk about oil, we want to look at one thing. There's one web page that I'm sort of glued to outside of course, CNBC.com and the live blog that we ran all weekend, guys, which is the map of the Strait of Hormuz. That's it. So we're looking at marine traffic by Kepler. The red dots, those are liquid tankers. An arrow means it's underway. A dot basically means it's at anchor. You can see in the top part, there is nothing, no red in the Strait of Hormuz, the narrowest part there at the peak. If we begin to see ships go through there, and at some point they will have to, whether it's with a naval escort or some sort of ceasefire agreement, because right now the insurers are saying, no thanks. Once we start to see ships go through that port, that hole, whatever you want to call it, then we will see the price of oil and natural gas probably come down a bit. But right now, it's not closed, guys. I don't like that term because it's not a canal. There's no gate. There's no lock on it. But yet, it's too dangerous or too expensive to go through. JP Morgan very quickly out with saying 4 things to watch with oil. Number 1, the number of barrels disrupted, the length of time of the disruption. Does the Trump administration do anything around the SPR? Remember that, Strategic Petroleum Reserve. And of course, the question nobody can answer, Carl, what comes next? No one knows. And as an industry executive told me yesterday on the phone, if you find out who's running Iran right now, let us know, because that controls everything.
Yeah, we'll keep our eye as well on any reports regarding Saudi production, Brian, and whether or not some of these drone attacks spur the Saudis to act somehow militarily. That would be an additional wrinkle in this story. Brian, thanks. Brian Sullivan. We are getting S&P Global Manufacturing now.
Guys.
A few moments ago. Let's get to Rick Santelli. Hey, Rick.
February final read on S&P Global Manufacturing PMI raises up 0.4 from its original release at 51.2, 51.6. How does that comp? Well, that comps to 52.4, which was the January read. So it's still above 50, and that is a good thing. The last time we were below 50 was December of last year. And we see all the interest rates are elevated, and many have pointed towards past episodes of geopolitical issues being a flight to safety going into treasuries. This one, of course, seems to be paying more attention to the cost of things like oil and potentially the cost of war. more. But ultimately, the moves in treasuries were up about 8 basis points in a 10-year. But do remember, the 10-year closed at the lowest yield since October of 24 on Friday, so there is some of this kind of bounce energy involved, but we are above 4%. And if we look at 2-year note yields, they're also up fairly equal shift on the yield curve. Short maturities and long maturities are all up about equal amounts. Squawk on the Street will return after a short break.
Defense names, not surprisingly, near the top of the list on gainers. There's LMT, Northrop, RTX, L3 Harris, Boeing, by the way, also the second best Dow name at the open here. As we've erased some opening losses, S&P cracked just below 6,800 at the open, which would take you back about 2 weeks. We'll get Stop Trading with Jim in a minute. It's time for Jim and Stop Trading.
You know, Corey, we held up that chart of the defense stocks. I know that AeroVironment, which is AVAV, is up 40, but this is a drone maker. I think this is the less expensive way to be able to, when you read those stories, well, maybe we're out. They're not out. That's Wahid Nawabi, and they can produce them fast, they can produce them cheap, they can produce them good. So that is the drone company that I think that the U.S. government has favored. I love the cheap drones for, for purposes we all know that big hardware may be suspect. But AeroVironment, if you believe in drones, it's there, and it's look, it's $117 off its high, so you're not going in taking the high out. I think it's important to note some people want those. There it is, AVAV.
Right.
Good company.
What's important to watch today?
Well, I want to see whether oil does peak. I know that when we had the Gulf War, it was one of the greatest sale of all time was to buy oil. I am watching, like I said, I am watching gold. I'm finally watching Bitcoin to think, why was that not down? Bitcoin seemed to go down every day. I want to check it out today. And I'm watching, of all things, the company I have on tonight, Cummins, because these are companies that are still doing data center, and data center seems to be winning. Cummins has engines, they have truck engines. Jennifer's just an extraordinary CEO, and if you can take a look, obviously that stock is just a home run. The engines that they have do back up for the data centers, which obviously you can't lose any time because they have to be 24/7.
Right. Meantime, the street's going to have to keep one eye on the macro and the geopolitical. We're going to get a ton of specialty retail. Target, Best Buy tomorrow, AEO, ANF later in the week.
I think Best Buy is hurt by the DRAMs. Let's hope they're not. I think Target's got a new CEO, but if I were him, I would lower things and get that out of the way. But he's coming in like gangbusters. I like that.
They have it's their investor day tomorrow.
Yeah,
so,
investor day. It matters a great
Target.
deal because this is Fidelity. This is not Brian Cornell's Target. But you don't
turning around a retailer is not easy.
I was going to say, turning around a retailer in a world when there's Walmart and there's Costco, and there's Amazon.
We'll get Costco this week too.
Yeah, I don't forget Amazon really did a number on the drugstores. I think. Remember those?
Yes.
It's like CVS. But wow.
Yes. Jim, we'll see you tonight. Busy week ahead. Mad Money, 6 p.m. Eastern Time, as we're back to 6840 S&P. Don't go anywhere.
Good Monday morning. Welcome to Squawk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber. We are live at Post 9 of the New York Stock Exchange. Stocks are under pressure as the markets react to the U.S. and Israeli strike on Iran over the weekend. The S&P 500 down 0.5%. One bright spot in this market is energy because oil prices are surging. Most everything else is lower, although information technology is holding up well. You've got some strength in names like Palantir, no surprise, up 5%, sort of a defense tech play. NVIDIA is higher, though, as well, and so are some of the other semiconductors. But consumer discretionary, that's what's weak, down 2%. Communication services and financials, all the cyclical groups. Treasuries also making a move. They're buying the safe haven U.S. dollar, but selling treasuries potentially on this inflation trade, right? With higher oil prices, higher inflation, the 10-year yield goes back above 4%. We've got full coverage of the war in Iran, the impact on global markets. Great lineup of experts coming for you. Ian Bremmer from the Eurasia Group, former Defense Secretary Mark Esper, former Israel Ambassador to the U.S. Michael Oren. We're going to get through all the key details that investors are looking for.
First up, though, busy day for some manufacturing surveys. Let's get back to Rick Santelli. Hey, Rick.
Hi, Carl. Indeed. Now, these are the ISM PMIs, and these are fresh February reads. On the headline, manufacturing expecting 51.5. In the rearview mirror, 52.6. We come in at 52.4. And if we look at prices paid, we'd rather have these go down, but zoom, 70.5. Well ahead of the 60-ish. We're looking for 59 in the rearview mirror. 70.5 would be the warmest since June of 22. And if we look at new orders, 55.8, better than expectations, but lacking in terms of sequential. 57.1 in the rearview mirror. 55.8 would be the weakest since Dece of last year when we were sub 50 at 47.4. And if we look at employment on a week where it's very key, we get the big jobs report this week. Well, 48.3 expected, 48.8 better than expected, and 48.1 in the rearview mirror. So it's better than expected, it's better than the rearview mirror. Here's the problem. It's the 29th consecutive month under 50. Interest rates are moving up, parallel shift on the yield curve. The short end and the long end are each down about 8 basis points. Sarah, back to you.
Okay, Rick, thank you very much. Rick Santelli. So where do we look on a day like today? You have to start in the energy market because that is driving a lot of the price action and a lot of the concerns about the economic impact of this war. Look at Brent crude oil, for instance. That's the global benchmark. It is surging. Gas prices, especially in Europe, surging as well after Qatar made that announcement that they would be pausing. Remember, Qatar is a big gas supplier to Europe. What the market is telling you is that this is going to hurt inflation, the consumer discretionary travel stocks under pressure a lot this morning. You know, Wolf Research put out a pretty good analysis. They cited the Federal Reserve's FRB U.S. model for a $20 increase in energy prices. For every $20 increase, you see a 7 basis point hit to the level of real GDP and nearly 40 basis point boost to headline CPI. Year over year. So they actually put out a projection of what, say, a $20 increase in oil prices would mean for CPI, for inflation. And you can see, I mean, there's an elevated effect for, you know, the better part of the year. If this sustains Q2, Q3, Q4, we're talking about almost 0.4% increases in overall CPI. They say general rule of thumb is for every $1 barrel increase in crude, there's a rise in gas prices of 2 to 2.5 cents per gallon. In other words, consumer feels it.
Yeah. Meantime, the Journal is putting together some numbers on core PCE for January, which is already before any of this ever happened. If you look at the inputs from CPI, the inputs from PPI, which was hot on Friday, you'd be looking at the hottest core PCE since March of 24, roughly, at 3.1.
I know. I mean, the question is what happens to the progress that we've seen, or at least the stabilization of inflation? Does it perk back up? And yes, there were already signs even before this that there was a hotter PPI, for instance. Let's see what happens with oil prices. As we know, it's an important, you know, it feeds into the rest of first of all, it's a big component of how consumers spend money, but also feeds into other parts of the market like chemicals and everything like that.
Although I will point out, Yardeni over the weekend has what he calls a short war scenario in which crude actually goes lower after all of this is said and done, which would feed what he calls his roaring 20s thesis, which has been long-standing.
I mean, that is a bull way to look at it. The only thing I would say is that, the message that we had from President Trump over the weekend is weeks, and this could take a while. And so the market extrapolation is this could have a more pronounced impact, I think, on asset prices and on the economy. Just a few other places I wanted to highlight in the market right now that we don't necessarily do at the top of every show, but I think is important. The U.S. dollar surging. Dollar is a safe haven. Remember all the talk and the worry that, no, the dollar's not a safe haven anymore. People are selling the dollar. Guess what? Times of turmoil, buy the U.S. dollar. That's what the market is telling you right now. And another interesting bright spot, I thought, world markets are selling off right now. Concerns about high oil prices. But what's not is the Israeli stock market, which is actually surging today, and it is being driven by some of the defense names, some of the insurance names in Israel. That has been a real global winner for the last few years, I would say, ever since October 7th. But today in particular, a nice move higher for that market, along with other safe havens like precious metals. Gold prices are higher, and shippers are also higher, right? Because we're talking about some real constraints here on supply.
All right, let's get to Washington, D.C. Lawmakers demanding answers from the White House on the Iran strikes as both the House and the Senate eye a vote on a war powers resolution. Emily Wilkins joins us now. She has the latest for us. Emily.
Hey, David. Well, look, we're going to see a key group of lawmakers be briefed today by Secretaries Marco Rubio as well as Defense Secretary Pete Hegseth. And then tomorrow we're expecting full briefings for the Senate and the House from those officials. After those briefings, we're expecting both chambers to vote on a war powers resolution. Now, that resolution would require Trump to get further congressional approval before any additional strikes in Iran. So far, we've already seen 3 Republicans say that they will vote for this War Powers Act because they want Congress to really exert its power in declaring war. Yet at the same time, you've got several Democrats who really support these strikes on Iran. They're going to be breaking their own ranks and voting against. A vote is really going to put all lawmakers on the record. It will be very key to watch. But even if the check on Trump's powers do pass both chambers, Trump can just veto this, and Congress lacks the vote to overcome a veto at this time. In the meanwhile, a lot of lawmakers, they're looking to these briefings to try to provide some clarity on what comes next, how they might want to position themselves. Senator Mark Warner, he's the top Democrat on the Intelligence Committee, one of the few lawmakers who was actually briefed last week on Iran. He told MS Now's The Weekend that lawmakers don't understand why the strike happened when it did.
The story of why now seems to keep changing. Early in the week, it seemed like this was an attempt to go after Iran's nuclear capabilities. Then it moved into a discussion of Iran's ballistic missile capability that could strike our bases or Israel. And now it seems to have morphed into regime change. So all this means, in my mind, is that there was no imminent threat to America.
House lawmakers will also vote again this week to try to fund the Department of Homeland Security, which has been shut down for more than 2 weeks. Of course, the House has already passed the bill. The issue now is with the Senate. Not clear if the Senate's going to be doing a vote. We know that Senate Democrats and the White House have been exchanging paper, trying to get to a yes, but at this point, it doesn't sound like they're anywhere close. Guys?
When Democrats say that he launched this war illegally, that's not true, is it, Emily? I mean, the War Powers Act.
All right. All righty, team. The plans I called out earlier are pretty much working. But I am on the sideline. Called out a 681 strike, 682.10 entry. 682 entry, 683.4 for the first profit target. 686 for the second profit target. But I'm not in this trade. I am on the sidelines, remaining patient. I'll show you what it looked like on the trading view chart. I was looking at that 682 in this area, a break and retest, okay? 683.4 first profit target area, and then possibly 686 for a second profit target. But I am remaining patient on this. What's going on here? Let me check with the team. BFH is in there in the building. Aren't we at the top of the selling algo as well as support area? Bigfoot didn't get to the 0.3. All right, Jesse's in the building. Jarrett's in the building as well. Shout out to your team. Let's take a little assessment here as far as what's going on. And there is a new algo. That is correct. Thank you, teammate, for pointing that out. You can see us with that selling algo pre-market, and we broke that. And we are now currently in a controlled buying algo. Let's see what that is going to do and potentially look like. And there it is there. Let me go ahead and put the appropriate color. And this is where we stand currently. Put that there. Pretty much and pretty close back to Friday's close. Trying to close that gap. Let's go ahead and get rid of pre-market. We don't need that right now. We don't need pre-market. Let's get a better look without it. Okay. We'll go with this look for right now. Again, I am remaining patient, choosing not to get involved with this levels of uncertainty. Remaining patient. Clean things up a little bit. Give me a second.
Well, that could cause a lot of ongoing damage to travel patterns, for example. I mean, let's face it, Dubai, Abu Dhabi, these are now incredibly important global hubs, and Iran can act as a significant disruptor.
Yeah. Ian, finally, certainly appropriate to talk about combat, but let's just end here on outcomes. Realistically, where in the range of outcomes, can you give us some sense as to how you're thinking about it and what seems most likely?
The most likely thing is that the Iranian people are going to continue to experience the worst levels of casualties. They had, in a matter of 2 weeks in January, probably the worst civilian killings that we've seen since the genocide in Rwanda. And that's an extraordinary thing to say, and that repressive capability for the paramilitary groups and for the Iranian Interior Ministry, that continues to exist today. The regime has been decapitated, but its repressive capacity domestically is still very strong. And so, I mean, to the extent that what Trump wants here is a government that he's going to want to work with, and a government that is representative of the Iranian people and that stops engaging in brutal killing, as well as the export of terror and the rest around the world, which continues to be a very real and present danger, those things rely on hope, not strategy.
Ian, it's just day 3. We'll see what happens over the next 4 weeks if we take the president's timeline at face value. We'll talk soon. Ian Bremmer.
Take it easy, guys.
Here's our roadmap for you for the rest of the hour. When we come back, we'll look at the market reaction to the war in Iran and a big comeback off the lows with Mike Santoli's first take on the news.
Plus, former Defense Secretary Mark Esper will join us. Of course, we'll discuss why he says President Trump made the right call.
And former Israel ambassador to the U.S. Michael Oren on what he's calling an event of immense historic proportion that will profoundly impact the Middle East. As Squawk on the Street continues.
Hit the like button. Do appreciate you. Today is Magnificent Monday, the first day of the new month, the first day of the trading week, and a day of uncertainty. After the weekend's activity that has taken place all over the world, the market is in a position of indecision. So I'm choosing to be patient and allow the market to settle before I get my money involved, as these are uncertain times. And the main thing the market hates is uncertainty. So with that uncertainty, I am choosing to be certainly sitting on the sidelines, remaining patient and observant.
Welcome back. Stocks staging a major comeback here early off the lows as Wall Street reacts to the war in the Middle East. The S&P was down more than 1.1% shortly after the open. It's down 0.2% now. CNBC senior markets commentator Mike Santoli is with us as industrials now join technology and energy in the green.
Guess what's in industrials? Defense stocks. So I do think that what this market has gotten in the habit of doing very well is sequestering the stuff that seems vulnerable in a given moment.
Jesse says, is this the top of the buy? Man, I had a failure to stay in my 681 call. I'll learn. Much love to the team. Yes, sir, Jesse, much love to the team. And potentially, again, this is some very uncertain times. I did see the potential for the market to bounce back to the potential close of Friday. Which is why on my plans that I made early this morning, I'm sorry if I didn't get them out there again, was that 681 strike, 682, 810 entry, 683, 4 for the first profit target, 686 for the second profit target. It's still very early in the day, and because it's very early in the day, we could possibly hit that 686, maybe even 688. depending upon if people feel that this is a great place for them to come back buy in. But again, this is a state of uncertainty. And we have the news up, we have CNBC going, and we are aware of the times that we are in right now. But nonetheless, if you was able to make a trade, Jesse, and be profitable, shout out to you. We all wish we could hold a little bit more, but if you saw an opportunity to take some profits and you did so, salute to you, sir. Salute to you. Of course, if the market presents an opportunity to do better, I know we will. And I know you will look at this and reevaluate it. But for right now, I definitely want to say, absolutely be grateful. Absolutely be grateful. There are a lot of people who are losing money this morning. And if you are one of the blessed ones to be able to make some money this morning, be very grateful and diligent. The rest of us, let's be patient.
Extremely strong earnings, to which they got a very negative response, but it's showing real signs of life this morning, up some 2%. Did announce these two deals as well on sort of optical infrastructure for data centers with both Coherent and Lumen.
Right now.
Yeah, and I think it's really more, David, the way the market is kind of holding itself in this weird equilibrium. It's not as if everybody had a big rethink on NVIDIA's numbers and now thinks that at 177 it was a screaming buy. It's just kind of like, well, nothing has changed enough to take all of these things that far out of the range where they've been in for a while. Doesn't solve the big AI questions. It doesn't necessarily tell us that credit is not giving us a scary signal or that it's late cycle kind of dynamic starting to take hold. But it also doesn't necessarily make those things worse in an immediate sense.
I guess almost 8% move in Brent crude oil prices doesn't change the inflationary outlook.
It's not nothing. I have to say, it's not nothing. And look at the consumer stocks. They're not doing well right now. So it's not as if we're totally shrugging off the impact. But if this is what it's going to be, I guess the calculus is it's absorbable at the moment. Yeah.
Mike, thanks. Mike Santoli. Coming up after the break, former Defense Secretary Mark Esper is with us on what could come next in this growing war with Iran. Israel's former ambassador to the U.S. will join us with his take on the future power balance in the Middle East on a busy Monday. Stay with us.
Team, remember, we are not here to predict. We are only here to react. Again, we are not here to predict. We are only here to react. We are not here to predict. We are only here to react. I'm adjusting that algo. Being that we bounced from the 683.5, that point there is an adjustment that I needed to make. Look at everything else. Two-minute top left. 15-minute bottom left. $30-minute in the bottom in the middle. Our teammates saw that early. Oh, wow. Shout out to Ben. Big Ben. Ben, he's taken 3 successful scalps. He said his heart's starting to accelerate and all that. I'm starting to see real estate fall places. I got to take a break.
The former regime had every chance to make a peaceful and sensible deal. But Tehran was not negotiating.
That's what
they were stalling, buying time to reload their missile stockpiles and restart their nuclear ambitions. Their goal, hold us hostage, threatening to strike our forces.
That was the Defense Secretary, Pete Hegseth, this morning, insisting that Iran had the opportunity to make a deal before the U.S. and Israel launched strikes on that country on Saturday. Let's bring in a former Defense Secretary, Mark Esper. He served during President Trump's first term. Good to have you, Mark. First off, let me just get your reaction, obviously, to the strikes themselves and the ongoing combat. Do you agree with the decision to go to war?
Well, good morning. And the answer is yes. I think it was the right decision to go. I think it's been very successful so far, over 2,000 sorties. And it now appears, at least General Kane said this morning, that the United States and Israel have air superiority over Iran, which means they can pretty much do whatever they want with some concern. So I think that is ongoing. We obviously see that they're taking down ballistic missiles, more importantly, the missile launchers. They've attacked the Navy, IRGC Navy, and most notably, of course, is the decapitation strike, which took out the Ayatollah and many members of the defense chain of command and other key players in in Iran. So I think it was a strategic opportunity to take down this regime who clearly had no ambition or no willingness to give up their nuclear ambitions, and were indeed rebuilding their weapons stockpiles, their air defenses, and trying to procure the same from both Russia and China. So given the opportunity, I thought it was the right move.
Yeah. I mean, it seems certain that this will deplete, if not eliminate, their ability to obviously wage war to a certain extent and or also embolden any of their potential allies, so to speak, in the region, that's this being Iran, to do the same. But I wonder, what are your expectations over a period of time, right? What are your expectations, though, for the longer-term goal, one would hope, that there would be significant regime change that would change the entire orientation of the country itself?
Yeah, that's one of 2 or 3 really key questions here. Look, clearly you can't affect regime change from the outside, let alone through air power alone. What we can do, of course, is set the conditions for which the Iranian people might have more space to rise up. And one of the things that we could do, or maybe have already started doing, is not just attack the IRGC leadership, but go after their barracks, go after their nodes of power, their communication systems, attack the Basij. These are the motorcycle thugs in every city, town, and square in Iran. So if you could kind of suppress them some, then you give the Iranian people some room. But the bigger question is this, and that is, what happens in the ongoing days? We, being the United States and Israel, will continue to take down and degrade Iran's capabilities. That is doable. It will take some time. But does Iran try and undercut that by maybe coming back to the negotiation table? We heard the president say, and other sources report, that Ali Larijani, who is arguably in control right now, say that he wanted to do that. He came out and denied that. But you could see a play if they were smart, although they've never missed an opportunity to make a mistake. Them coming down and saying, "Hey, we're ready to negotiate on nuclear issues and willing to give it up." I doubt that, but that would be a play that could short-circuit some of the broader ambitions of taking down the conventional military and forestall any type of uprising by the Iranian people.
Secretary,
so that's kind of that's one possibility here in the coming days.
Were you surprised that we knew Iran would retaliate on Israel? I mean, they were prepared for that, but that they fired missiles and drones against, and not just military targets, civilian targets across Bahrain, Qatar, United Arab Emirates, Kuwait, Iraq. What are they doing?
Yeah, I was a little surprised, and then I think on your network, I said late last week that my view was what they were trying to do.
She said, "What are they doing?"
Influence with President Trump or Israel, and the Europeans were staying out of it. That they were trying to get the Arab capitals to weaken, to kind of put pressure on Trump indirectly to forestall the conflict or at least cease it. And clearly that didn't work. What they did by going after not just military targets, but at airports and hotels, is they've rallied the Arab states to really take sides. And these are the Arab states that said, hey, look, we won't support American forces. We won't allow passage through our airspace. And so now what they pushed them into our category. So I think it was a failed plan by the Ayatollah that just kind of engineered greater support or greater opposition to him and the regime. What do you think China's reaction is going to be, especially given so much of their crude does flow from Iran? Yeah, I was going to say, of course, most of their crude, 80% or so, comes out of the Strait. Look, they've protested. Obviously, they're going to continue to paint the United States as a hegemon who doesn't follow the rules-based order, et cetera, et cetera. But clearly, this also sends a signal, once again, that America is more willing to use force and that we have incredible capabilities. And that'll push back on them. We've seen Russia, of course, protest as well. And very disappointed I am in the United Nations and the stance it's taken. But I'd like to see the Europeans come on board more. We'll see whether they show more support in the coming days.
They were urging diplomacy over the weekend. Like, what a joke.
We've been doing diplomacy for 47 years with Iran. I mean,
exactly.
And successive administrations, the Bush, the Obama, Trump won when I was involved. I used to say, look, we'd love to see Iran act like a normal country. They never responded. And then they ignored Biden for 4 years, and Trump over the last several weeks was pushing them to cut a deal. And so, look, we've tried a lot of diplomacy. It's time. It's been 47 years of them killing Americans, disrupting the Middle East, their proxies causing mayhem, killing people. It's time for this regime to end once and for all, and that'll be a good thing for diplomacy, for economies, for global oil trade, for security, if that happens.
Yeah, I'm sorry, go ahead,
I mean,
Carl.
you would agree that we haven't done a lot to incentivize allied support out of Europe, whether it's tariffing the EU or insulting the contributions of their soldiers in Afghanistan or anything else. Yeah, look, you always want to go to war with as many allies as possible, and I think President Trump, it's a good question that hopefully he'll be asked, or his cabinet. Why was there more outreach to the Europeans? Did they not want to get on board? Again, they're so focused on Russia and Ukraine, rightly so. But if we're all going to be, partners and allies, the democracies of the West standing up against the autocracies of Asia, of Russia in Europe and of the Middle East, who are causing bad things, and we should all stand together on these different regions and push back and help one another.
Finally, I'm curious to get your insights on weapon stockpiles and whether we have enough materiel, so to speak, to continue to wage this without putting at risk, perhaps, our ability to do something else, should we be required to.
Yeah, I think I said, when speaking to you guys last week, I said I'm very concerned about our defense industrial base. We are not positioned for a long war. A long war which entails the expenditure of any number of munitions, not just direct strike munitions, but maybe more importantly air defense, because so much of it's been chewed up by allies and partners from Israel to Ukraine. Others are buying it. So look, I think the defense industrial base really needs to, in terms to expand it with regard to its capacity. We should be stockpiling many of these key munitions. We probably need to look at a new mix of smart, dumb, and maybe not so smart missiles, because we just can't afford to build missiles that cost $2 or $3 million each that take 12 to 24 months to build. Certainly not in a conflict with China, and war game after war game has proven that out. So I think we need a combination of expansion. We probably need to put some factories in a combination of cold or warm production capacity, but we need to prepare for the long game, and we're not there yet.
All right, Mark Esper, appreciate it. Thank you.
Thanks, guys.
Meantime, Dow down about 250, well off the session lows. Let's get a news update with Pippa Stevens. Hey, Pippa.
Hey, Carl. The FBI is investigating whether a shooting that killed 2 people and injured 14 in downtown Austin, Texas, was an act of terror. Local authorities say a 53-year-old man opened fire from his SUV just before 2 a.m. Sunday and struck people sitting outside a popular bar and on its patio. They say he then parked nearby and shot at passersby with his rifle before he was eventually shot and killed by police. The Supreme Court is hearing arguments today in a Second Amendment case over a federal law barring illegal drug users from owning guns. The Justice Department is fighting to uphold the law, which has been challenged by Second Amendment advocates. And First Lady Melania Trump will chair a meeting of the United Nations Security Council today as the U.S. takes over the monthly rotating presidency. The White House says she will emphasize education as a tool to promote tolerance and world peace. A UN spokesperson says it will be the first time a spouse of any serving world leader has chaired a Security Council meeting. Sarah, back to you.
Okay, thank you very much, Pippa. After the break, why one firm says it sees a big buying opportunity right now in NVIDIA, which is bucking the overall trend, is up 2% today, and much more on this market reaction to the growing conflict in the Middle East as stocks stage a big comeback off the early morning lows. Don't go anywhere. Welcome back. We are more than 30 minutes here into the hour. Here are some big movers we're watching. NVIDIA higher, bucking the market downtrend. Morgan Stanley calling the recent pullback in NVIDIA a, quote, surprisingly good entry point to pick up shares. Separately, NVIDIA announcing plans to invest $4 billion into Lumentum and Coherent to boost its research and development in data center optics. Berkshire Hathaway posting its last quarterly earnings report under Warren Buffett as CEO. Operating earnings fell 30% year on year, stock down almost 5%. And then clean energy supplier AES at the bottom of the S&P, down 17%. News that it is being taken private for $15 a share in an all-cash deal. I guess that was disappointing.
Yeah, I mean, you don't go. Usually, I don't see companies go back to July 8th to justify a 40% premium on the 30-day VWAP, but that's what they did, saying that's when the first media reports were out there. They're claiming that going private will allow it to raise more capital for all it needs to do. It does provide power as a regulated utility in Ohio and Indiana. I think it's 1.1 million homes, in addition to a clean energy supplier.
Up on that.
And I just read some things. You know, when you sometimes they stick.
There you go.
When we come back, a lot more on the streets, reaction to the war in Iran. Market expert Richard Bernstein will look at the impact on inflation and on stocks. By the way, don't miss Jamie Dimon, JP Morgan's chief, live from the company's annual Global Leveraged Finance Conference. That's coming up at 1:40 p.m. Eastern Time on the Exchange. We're back in a minute. Back to the war in the Middle East, rattling global markets today. Stocks are off session lows, but still lower this morning as energy prices do climb. Let's bring in Richard Bernstein, CEO and Chief Investment Officer of Richard Bernstein Advisors, talk about where markets go from here. Rich, good to see you again.
Carl, how are you?
I'm good. It sounds like you think at net, this is at least somewhat inflationary, these developments.
Yeah, right. Carl, I think that, wars historically have been inflationary to various extents, right? I mean, we could argue how much inflation there's going to be. I think it's very difficult to argue that this will result in disinflation or deflation. I don't think we should do that. So the question is, how much inflation is there going to be? And I think in an environment where the United States has, a massive trade deficit, anything that forces more deglobalization, which clearly a war does, one should err on the side of more inflation rather than less.
How does the bond market take that, especially if it also suppresses activity?
Well, I think, long term, short term, I mean, who knows, right? I mean, we're seeing all kinds of reactions in all kinds of markets, knee-jerking around like crazy on every little bit of information. But longer term, I think the initial reaction is that long-term rates go higher, that we see more inflation than people expect, and then how the Fed responds to that will determine what happens to rates going forward.
And what do you think? What do you think? I mean, it's hard, as you said, it's hard to tell. But what does a good game theory on Fed policy look like at this moment?
Well, I'll be perfectly honest. I can't figure out why the Fed nominee wants to be nominated right now. It seems to me it's sort of a lose-lose situation. If you cut rates into this environment, remember nominal GDP in the third quarter, the fourth quarter doesn't count because we have the shutdown. Nominal GDP in the third quarter was over 8%, the first true 8% quarter we've had in over 20 years. So if the Fed starts cutting rates into that environment now with a war, you could easily become the second coming of Arthur Burns, the 1970s Fed chair.
Well, I saw you post on Friday about PPI, which, strip out COVID, is a record month-on-month jump. You think there's an argument to hike?
I'm not sure there's an argument to hike. If I were the Fed chair, I would be very stingy and very unpopular. That's not always politically the best thing to have happen, but I certainly wouldn't be cutting rates in this environment. With a PPI that's rocking, and now war and oil prices are going up and commodity prices are going up and supply chains are going to be disrupted here, I would be very, very hesitant to cut rates here.
Though if you look at core CPI, that takes out food and energy we assume to be volatile, right? We hope we're not in this war for that long that would have any kind of sustained or prolonged impact on inflation. So I don't know. I could see a case for them looking through this.
Yeah, well, I think, Sarah, the statistic that Carl quoted that we tweeted about last week was the core PPI. So the core PPI has some muscle to it now, if nothing else. But it's always been from an investor's point of view. I get there's an economist's point of view and there's an investor's point of view. From an investor's point of view, you have to assume that we're still going to eat and we're still going to travel and drive cars. And in that respect, it will have an impact on the economy. And so I think we have to be very careful about just taking this economic role that energy prices don't count, right? I mean, that you have to remember that all occurred because economists thought that energy inflation in the 1970s wasn't real and wasn't meaningful, right? In the 70s and into the early 80s. That's how they came up with the concept of the core CPI. So I think we want to be a little careful about going backwards in that respect.
Right. Rich, we'll talk more in the coming days, hopefully, about being selective in stocks and where to go next. Good to see you. Rich Bernstein.
Thanks, guys.
After the break, former Israel ambassador to the U.S., Michael Oren, is with us, looking at how the war in Iran could shift the balance of power in the Middle East. And a programming note, tomorrow, we'll be joining you live from Target's headquarters in Minneapolis. It's earnings day, it's investor day. It is the first time you will hear from the brand new CEO, Michael Fidelki. It's his first interview with us here on CNBC. We're back in a moment. The war in Iran could dramatically reshape the balance of power in the Middle East. That's what our next guest says. The former Israeli ambassador to the U.S., Michael Oren, he served as the ambassador for 5 years from 2009 to 2013. Ambassador Oren, it's good to see you. I believe you're joining us from Israel. What's the reaction there on the ground, and what are the expectations for how long this lasts?
Well, good to be with you. The expectations were about 5 minutes ago. We had a missile attack and a siren going off, so we all went into our safe rooms, our household bomb shelters. Everyone's okay. A couple of very loud booms shook the building, but other than that, everything's okay. This is happening many, many times a day. Last 24 hours, probably about 30 different times. And yesterday, 9 Israelis were killed in a missile that hit directly on a bomb shelter. These are not small munitions. These are missiles. They aren't rockets. They're missiles that carry over 2,000 pounds of TNT. And they can destroy not just a building, they can destroy an entire neighborhood. And for Israel, this is the major reason we are embarking on this military campaign, is that to prevent Iran from getting 30,000 of these rockets. And if they have 30,000 of these missiles, they can then rebuild their nuclear program. They can support terrorist groups throughout the Middle East with impunity. If this campaign succeeds, and I think there are different definitions of success, but let's say at the minimum, degrading Iran to the degree it can no longer threaten Israel or any of its neighbors. Iran is firing at just about every state in the Middle East tonight. That would be the minimum, or regime change. There's a different government in Tehran. Either way, it's transformative. It means the Middle East will never be the same again for the foreseeable future. It means Israel can have peace negotiations with Lebanon, peace negotiations with Syria. We can have a Pax Americana restored throughout the Middle East, and linking the Middle East, by the way, to India. We had the Indian Prime Minister here last week, and he wants that kind of strategic arc extending from the Mediterranean to the Ganges. Imagine that.
I mean, it's transformational. It's hopeful. Ambassador, what do you say to those, in this country that are wondering why we embarked on this war at this time?
Well, I don't think it's our place in Israel to tell the United States why it should go to war, but people keep on asking me, and since you are asking me, Israelis sort of shake their heads at the debate in the United States. What moral universe do you have to be in to not consider an attempted assassination of the President of the United States and other senior American officials, to not consider that an act of war? Or that even during the last 2.5 years, Iranian proxies have launched 180 rocket and drone attacks against American bases in the Middle East. They've wounded dozens of American service people, killed 3. Each one of those is an act of war. And you could say, people would say, well, the threat isn't imminent. And that's similar to what the British said to Churchill in the 1930s when he worried about the Nazis. You want to wait until Iran gets these type of weapons that are going to threaten America, and that's a matter of time. So Israelis really shake our heads. Just how much does Iran have to threaten and kill Americans in order for America to justify taking military action against Iran? That would be our position.
So I guess the question, and you raised this, is how it is, whether it is deemed a success, and how we will know about that. They're still firing missiles, even though the Ayatollah was murdered.
It's true, and another criticism of President Trump's decision to embark on the Operation Epic Fury is that we don't know the outcome. But you have to say that about every war. When Roosevelt and Churchill went to war against Nazi Germany, nobody knew the outcome. Nobody knew the outcome against Imperial Japan. In wars, you do not know the outcome by definition. But you hope for the best, and you strive to achieve a certain strategic objective. Our strategic objective is quite simply to eliminate, to the greatest degree possible, the Iranian threat to our national security. And I think I can add to the national security of our allies in the Middle East, our Arab allies in the Middle East, who are under fire as we are tonight.
Ambassador, despite the intelligence failures of October 7th, the Mossad seems to have taken on an almost mythical status in the minds of many who believe that there's a plan somehow, in some way, inside Iran, given all the operatives conceivably that have already been operating, to do something there in terms of galvanizing an opposition that could take power. Is that a hope that could be realized?
I wouldn't rule it out. I'm not privy to sensitive information here, but we know to the immense degree to which the Iranian leadership, the military, has been penetrated by Israeli intelligence. I mean, on the eve of the previous round of fighting, Operation Rising Lion last summer, the Mossad knew where all the leadership were sleeping, where the nuclear scientists were sleeping, and the rockets used to eliminate those individuals were fired in Iran by Iranian operatives that were, in cooperation with the Israeli intelligence, as far as all the published information will tell us. So they're deeply, deeply compromised. I mean, the Mossad, together with the CIA, knew where 40 leaders of the Iranian government, of the regime, were meeting on Saturday morning. And we're including the Ayatollah Khamenei, and we're able to eliminate them at all one thrust. That's extraordinary penetration of an enemy country by our joint intelligence services. So one has to assume that those same joint intelligence services are in touch with oppositional elements within Iran. We'll have to see. We'll have to see if the Iranians come out again in the hundreds and thousands and potentially millions to demand liberty, to demand democracy, and a change of government.
Ambassador, stay safe. Thank you for joining us.
Thank you.
Always really valuable to hear from you. Ambassador
Good to be with
Michael
you.
Oren.
Thank you.
We do expect to hear from the president about Iran at the White House as he awards the Medal of Honor to some U.S. soldiers at the top of the hour. We will take you there live when that begins. In the meantime, Dow continues to shave away at some of its opening losses, now down 199. Money Movers begins in just a few moments. Good Monday morning. Welcome to Money Movers. I'm Carl Quintanilla with Sarah Eisen, live at Post 9 of the New York Stock Exchange. You're looking at a live shot of the White House this morning, where we are expecting comments from the president on Iran as he awards the Medal of Honor to 3 U.S. Army soldiers this hour. We'll bring you there live when it happens.
We'll also start with the latest on Iran. Defense Secretary Pete Hegseth saying this morning the U.S. will not be pulled into a, quote, endless war like Iraq. The chairman of the Joint Chiefs of Staff, General Dan Kane, adding that the administration expects more casualties. And in an interview last hour, President Trump saying, quote, "We haven't even started hitting them hard. The big wave hasn't even happened. The big one is coming soon."
Also watching the impact on the energy markets today, and for that we're joined by Brian Sullivan back at HQ. As we said earlier this morning, Brian, LNG is a very big story, especially for Europe.
Yeah, LNG is a big story. Oil's a big story. Chemicals and fertilizers are a big story. Carl and Sarah, and I know we're waiting for the president as well, so I'm going to get moving here. Here are some of the top stocks that are moving. I'm going to kind of blast through them and talk about each one because they're different. These are all sort of energy-related names. Number one, you got natural gas up. Oil's up 6%. But by the way, it's not up 30%. It's not up 20%. Some of the worst predictions simply did not come true. Natural gas, a big story there. But quickly, let's look at the biggest movers. And the number one biggest mover right now is a natural gas and LNG-related stock, Venture Global. They had their earnings as well. But guess what? Qatar Energy being offline, at least right now, maybe tomorrow, we don't know how long, is moving all the natural gas and natural gas complex stocks. Venture Global was heavily shorted, to be fair, so got some covering here. It's up 22%. Cheniere, another company that exports natural gas, in fact, celebrating their 5,000th cargo later on this year. Cheniere is also up. CF Industries, not getting a lot of attention, guys. Oil and gas getting all the play. But you know what also moves through the Persian Gulf and Strait of Hormuz? Chemical fertilizers. Ureas, phosphates, nitrates, etc. A lot of them are made in that region. CF, along with Mosaic, MOS, one of the bigger makers of fertilizers here in the United States. I actually used to trade this stuff. Some people say I still do. Insert joke here. Matador and Synovus, those are also on the move, sort of mid-cap oil and gas companies. Conoco, ExxonMobil, and some of the other larger caps are on the move. Cord, another mid-cap oil stock. And then Golar. Okay, who is Golar? Golar LNG, I know it sounds like a sort of a mythical creature, but it might be, by the way, but it's actually a big shipping company. And some of the shipping stocks are also soaring. That stock's up about 4% because if you're going to ship LNG, you're going to pay more for it. The insurers, they're going to take their cut, guys, but the ship owners, not just for LNG, but also oil, freight, everything else, they're going to take their cut. So a wide swath of movers that are all moving today on the back of what you guys just talked about.
And what do we know about whether ships can pass through the Strait of Hormuz, right? That was the big worry, is that there's just so much that depends on global energy production and shipping going through that key area, and whether Iran has the ability to close it and will do that.
Well, you asked the exact right question, Sarah, and I would expect nothing less. That is a live map from marinetraffic.com by Kipler of all the ships in the Strait of Hormuz. Red is a liquid tanker, oil, natural gas. Green is a freight ship. Blue, other. There's also a couple of cruise ships that are in there, by the way. I guess if you're going to be stuck, you might as well be on a cruise ship. And you see a couple of those blue and green ships at the top starting to move through. The oil and gas markets and chemical markets, the fertilizers, they're going to move based on how that graphic looks. And if that live map begins to show more ships going through that narrow stretch at the top, I would expect oil and gas to come down a bit. But if that goes on, meaning very little movement, everybody kind of at anchor, waiting to see what happens because they can't get insurance, or if they can, Sarah, it's just too expensive to risk, also life and limb. If that goes on for a day or two, we're probably okay. If it goes on for more than 7 days, 2 weeks, the president just saying we haven't even really begun to fight, or whatever Horatio Nelson sort of quote there, then we're going to have a very different story. And that's when those predictions of oil at 80, 90, and maybe up, those could start to come true. We have to start to see some traffic for oil and gas through that Strait of Hormuz, and soon. Because, by the way, guys, too, the oil is still coming out of the ground. It has to go somewhere. You run out of storage. Eventually, you turn off that tap, or you put it on a ship. You hope for a U.S. naval armada, some sort of escort convoy, whatever, and you go through.
Yeah, that's why we're watching both production and the choke points, as we said earlier, Brian. By the way, we should mention we got a production hike out of OPEC in the midst of all of this, of a couple 100,000 barrels a day over the weekend, although it's just a fraction of what they've already removed.
Yeah, they're still pulling off about 1.65 million barrels from their peak of pre-COVID, Carl. But you are right. On Sunday, they had a meeting. On paper, they raised the quota by 206,000 barrels a day. Not a lot, and it's on paper, so we'll see if it actually comes true. But the one other thing I want to point out, guys, go back to that map of Strait of Hormuz. That's about 20 to 30% of oil, gas, whatever. But the other thing is Saudis, they built a pipeline. We don't show it there, but they built a pipeline from one side of their country to the Red Sea. It can do 5 million barrels a day, upwards of 7 million barrels a day. It's called the East-West Pipeline. They can start to move more oil through that to avoid ships going through the Strait of Hormuz and instead going to the Red Sea. Although, as I need not remind you, but I will remind our viewers and listeners, Red Sea is hardly a bastion of safety either, because for years ships have been harassed by the Houthis with missile launchers off of speedboats, and that has also raised insurance costs and risks. But once we start to see some ships go through that little area, assuming we do in the next couple days, guys, things are going to move, and oil prices will likely move down unless we see, as the president said, maybe another layer of escalation.
Brian, thank you for going through some of the key risks around the energy sector. Brian Sullivan. Meanwhile, stocks are well off the lows of the morning. Let's bring in former Goldman Sachs Asset Management Chairman and former UK Treasury Minister Jim O'Neill. He's now the chair at Northern Gritstone. Jim, it's great to have you with your global market perspective. Hello. Just as Brian was talking about, it strikes me just how different the world is in terms of oil supply than, say, in the late 1970s during the Iranian Revolution, when we had the energy crisis and the great oil shock. How do you reflect on that, and what do you expect to be the big risks around energy this time?
Well, I actually did my PhD during the second oil price crisis, all about OPEC, oil surpluses and the consequences.
I figured you were an expert on it. That's why I went there.
So one of the few things I learned from that PhD is you've got to be very careful jumping to a conclusion. I still have a stack of research that showed all sorts of gurus of the time saying how oil prices are going $100 a barrel and higher. And actually, before I finished my PhD, and then for the next 20 years, they went down. And, you know, I've lived through my professional time lots of various, you know, versions of this before. I remember actually flying into Kuwait the day that Iraq actually bombed them. And of course, 9/11 is when I dreamt up the whole BRICS thing. So I kind of reflect on these moments pretty dramatically. So I think, Brian, your colleague, sort of got to the crux of it, but I think there's a bit more as this day goes on. Obviously, the scale of choking at the Straits of Hormuz is obviously really important, but as evidenced by the relative price of nat gas to oil, the fact that Qatar's LNG supply appears to be off-grid in itself is why we've got those price movements, but it's a sign that the Iranians are not sort of being limited by anyone they can lash out at. And so who knows what they're going to do next while they've still got some ammunition to fire. And so I think it is very, very uncertain just in the next few days. And like many other people, especially outside the US, I suspect, you know, I'm trying to fathom out whether Washington and Trump and his colleagues have actually got some coherent big picture strategy here. And my God, I hope they do, because this is pretty colossal, even compared to the Iranian attacks back then. And quite how, at the moment, it's pretty hard to see what the US is really trying to achieve here, rather than use shock and awe of its incredible immediate military power. But the idea that this is going to lead to some kind of internal driven revolution in Iran is kind of pretty hard for me to get my head around. And the broader thing is that with all these Gulf countries being hit the way that they are, I think there's going to be yet more questions about the real depth of the relationship between Washington and some of these countries. And as I know, with my BRICS hat on, and I spend a lot of time on it again these days, in any case, I've actually been in the Gulf twice the last 3 months. I think that this could accelerate the strategic relationship of a number of these countries towards the east than Washington, unless there is some clearer strategy that we're still yet to find out about how this can be brought to an end and some kind of hope for more sustained peace across the Gulf.
Which countries are you specifically referring to, Jim? Are you talking about some of the likes of like UAE and Dubai because of the capital ties?
Well, you look at the so-called BRICS Plus group, and BRICS Plus is a sort of political entity. It's now 10. It actually includes the UAE and Iran, and Saudis have been invited, and having just literally been there 3 weeks ago, they're sort of sitting on the fence about whether to be in it or not. Now, you can't ignore it, the rather important fact that 2 of those members are in the middle of this war because Iran has launched a large number of missile attacks, it seems, on both Dubai and Abu Dhabi. So quite what happens with that, but Saudis, I would have thought, must have been pretty eagerly trying to persuade the US to be really careful of just doing what the Israelis want. And if the Saudis get hit more, what on earth is that going to do as a result of the Saudi desire to protect itself properly? The real shock here to me so far is that all these places that will be depending on US support for protection are getting hit. I don't know what kind of coverage it's getting there, but the idea that fancy hotels in the Jumeirah Palm area of Dubai are getting hit, and the utter chaos it's causing to global travel. People can't get from A to B, involving enormous air hub travel out of Dubai and Qatar. It's pretty monumental stuff for the short term and the big picture. So,
well, many would think that this is why they're.
Sorry, go on.
I was just going to say, many would think this is why that the U.S. and Israel had to act now, because of the damage that Iran is capable of doing, a hostile terrorist state, with missiles and ammunition and potential nuclear weapons. But Jim, just on the market reaction, the Nasdaq just went positive.
It's
stock market's brushing it off.
It's fascinating how the relative market movements have been in the first couple of hours of U.S. trading, and indeed, that seems to be the immediate conclusion. And I noticed that I think I just saw that Bitcoin's up 5% on the day, which, given the bashing that's had the past week or so. But as I said at the start, having gone through a lot of these things in the past, I think one has to be pretty careful before jumping to any lasting conclusions about these kind of things. At the end of the day, I do think it will encourage more medium-term people to continue the search for alternative energies, so the rest of the world is not so dependent on such a sensitive part of the world for its energy. But if we can't get some more calm in the next few days, I can't see anything other than renewed concerns that would involve the U.S. equity market.
Really quickly, what's your safe haven of choice? Because we've seen gold rally, we've seen Bitcoin rally, we've seen the U.S. dollar rally, despite everyone saying the dollar's not a safe haven anymore. It's up 1%.
Exactly.
Where do you want to be?
So, I think part of it might just be position adjustment at the moment. I mean, the fact that the dollar's rallied so much, and very interestingly, that the yen has actually fallen more than the pound so far today. So, most people would have had the yen in its traditional safe haven quality on a day like this, and the opposite has happened. So it smells like people are just getting out of whatever risk positions they thought were good bets, and they're just sort of going back to shore, so to speak. But putting it all together, and you're right to point to it, Sarah, yet again, when it really comes to big moments, the dollar is demonstrating it hasn't lost its safe haven capability, at least not yet.
Jim O'Neill, always valuable to talk through this stuff with you. Thank you.
You're welcome. Have a good one. Stay safe.
Yeah, you too, to all of us.
When we come back, the former lead negotiator on the 2015 Iran nuclear deal, Wendy Sherman, will break down the latest on the fighting in the Middle East and potential endgames for the president.
Plus, a live report from Anthropic headquarters in San Francisco after the Pentagon blacklisted the company, signed a deal with competitor OpenAI. That is a huge story in itself. We're back in just a moment.
Welcome back. Still awaiting the president at the White House. We'll bring you those remarks when we get them, we think, in the next few minutes. In the meantime, let's dig into what's next for Iran's regime and the Middle East, broadly following this weekend's airstrikes. Our next guest was the lead U.S. negotiator on the 2015 Iran nuclear deal and joins us this morning with her outlook. Wendy Sherman, Deputy Secretary of State under the Biden administration, under Secretary of State for Political Affairs under Obama. Wendy, it's good to have you back. Thanks for the time today.
Absolutely.
Given that diplomacy is clearly dead, I wonder if you're sensing military strategies that would allow for some lasting regime change with minimal or maybe non-existent occupation.
I think it's very hard to know what's going to happen. I think you've heard that from your other guests this morning in terms of the markets. I think the same is true for the situation in the Middle East. We've got a lot going on, not only the Gulf states getting involved in this conflict, but Europe also now allowing some action from their bases and getting engaged. So I certainly hope this doesn't go into even a broader war. But once war starts, no one ever knows where it's going to go. We know in the Iraq war, we were all just completely awed, as you noted, by the shock and awe of those first few days. And then what happened afterwards was just intense, intractable horrors, and it took years to get to any kind of stability. Now, Iran's regime is a horrible one. It is odious, it is repressive. It just killed thousands of protesters. All of us would love to see change. But the United States is very bad at doing regime change, as we've seen on years past. And even this short-term, ostensibly, military action is with multiple reasons. It'll be interesting to hear what the president says, because in his interviews with various reporters and with Hegseth's comments this morning, the Secretary of Defense, we've heard all kinds of rationale for this. We are putting our men and women in harm's way. We are spending billions of dollars while Americans are worried about their own pocketbooks. And to what end? To achieve what? That's not clear, and I hope we hear some clarity from the President of the United States. He owes that to the American people. He owes that to our troops. He owes that to the families of our troops to keep them safe and out of harm's way.
Don't you think he's been very clear from the beginning that the goal is to not have a nuclear Iran and to not have Iran threatening the U.S. and its allies? I mean, just when Democrats argue against this war, it sounds like they are defending the terrorist regime.
Not at all. We go to war when there is an imminent threat. There is nothing imminent about what you just described. The president himself said that in June, along with Israel, we obliterated the nuclear sites. We didn't obliterate them, but we sure set things way back for the Iranians. In terms of their ability to project power, they've been pushed back. They, yes, have missiles, but they are a long way from long-range missiles, intercontinental ballistic missiles, that would reach the United States. That will take a very long time to come. So I think
but don't we also go to, not sorry to interrupt you, but don't we also go to war when there is a strategic opportunity to do so? And as Ambassador Michael Oren just told us, the whole imminent threat thing, you don't want to wait till it's too late.
Well, that's not what our law is. That's not what our process is. We go to war when there's an imminent threat. It doesn't mean we don't take discrete military actions for a purpose. Now, I think we all saw a special forces operation to remove Maduro from Venezuela, but we haven't tried to intervene into a war with Venezuela, which would be quite a different thing, take a lot of our assets. And, you know, the president's going to China at the end of this month. China's going to be very worried about its oil supply. The president withheld arms sales to Taiwan because he wants a good environment for that visit to Beijing. He wants to be partners with Xi Jinping. Xi Jinping has very different ambitions, whether it's on technology, whether it's on Taiwan, whether it's on human rights. His view is quite different from the United States of America. He wants to win the economic war. and he wants every advantage that he can have. The president, I think, is naive to think that we and China can just get along on all fronts and not have to compete with each other.
Axios had a good report today that no president in the modern era has ordered more strikes on more countries than the president, whether that's Iran or Venezuela, Nigeria, Yemen, Syria, Iraq. And then Fox today reports that the president told Bret Baier that the plan is to use Venezuela as some kind of template. How do you think that would work?
Well, Venezuela and Iran are incredibly different countries. The president found that Delcy Rodriguez, the vice president who's now acting president, could be someone he could deal with. We'll see where that goes. He clearly did it not to stop drugs from coming into our country, which was the original rationale, but in essence to have some control over Venezuela's oil. Whether that's a part of what's going on here, I don't think we know yet. Iran is a country of 92 million people. I think Venezuela is just a few million people. It has layers of institutionalized regime assets. It has thousands of missiles. It has drones. We saw that operating in Ukraine, which of course has been put aside given what's happening in the Middle East. We've got a lot to deal with, and now we are in a war. We are not just a one-off strike as we took in a special operations forces in Venezuela, or a one-off strike in Nigeria, which accomplished what, I'm not sure. Christians are still under siege in Nigeria, and Nigeria is a sovereign country trying to deal and work with the United States. So this is a very different circumstance. The stakes are very different, not only in terms of the markets that you all have been discussing this morning, but in terms of what Americans are worried about on a day-to-day basis. Yes, they want their 401ks to look good, but they also want to be able to buy groceries and afford them, and get a house and afford it.
100%, but we also want a world that is safe. You know, we want a world where America, you know, is first and is dominant, and where, you know, countries like China and Russia and Iran do not dictate the world order. And this might be an opportunity for that.
Well, I think the president's missed opportunities to do exactly that. He could have done that vis-a-vis Ukraine. He could have put more pressure on Putin to get him out of a sovereign country that should be able to decide its own political future. Instead, we have Europe at risk. We have Macron, the president of France, giving a speech today talking about how they're going to increase their nuclear weapons capability, talking about providing a security oversight for all of Europe, really changing the whole landscape of nuclear weapons if all of this goes forward. So I don't think the president has taken the opportunities that he could to keep the world safe. Look, I hold nothing for the Iranian regime. It is odious, repressive, oppressive, and terrible. But to go to war, we had other options, including further negotiations. Yes, they're tough. They can't be done in a drive-by, as was done by Steve Witkoff and Jared Kushner. They take technical experts. It is a long, tough road, but it is possible to stop Iran in other ways besides putting our military and our treasure at risk.
I know you worked very hard as a negotiator on the Iran nuclear deal during the Obama administration. President Trump took us out. A lot of people thought that's why we are here today, because they cannot negotiate in good faith, because that deal was limiting. It didn't include the missiles. It didn't include the spread of terror around the globe through various proxies. It had all sorts of limitations on the checks of nuclear. So I think that some would argue that this is the culmination of failed negotiations with an Iranian regime that for decades has spread terror.
I totally understand that people have criticized the deal in that way, and no deal is perfect. But in fact, the 2015 nuclear deal with Iran ensured that Iran would never get a nuclear weapon. And for more than 15 years, It would allow us to continue negotiations on other issues. It would have opened up channels of communication. The Iranians had said that they were open to discussing all of those other issues, and there were constraints on their missiles under UN Security Council resolutions and on our arms embargo for a period of time. So was it perfect? No. No deal is ever perfect. What the president is doing now will not be perfect. And if he indeed is saying that Venezuela is the template, does that mean that he's going to allow a repressive regime to stay in place if they will cooperate with the United States? That seems to me to be not what this should be about.
Right. Well, you're right that there's been minimal effort to explain it to the American people, at least. Barely a mention in the State of the Union. We'll see if we get more at the White House in a few moments, Wendy. Appreciate the time. Wendy Sherman joining us.
Thank you.
And still to come this hour, a top Israeli venture capitalist joins us live from the Middle East. How the fighting is impacting daily life and business in the markets there.
Meantime, watching the intraday action on the major indices, NASDAQ did go green for a moment there. NDX being led by Strategy, up almost 6.5%. Palantir, CrowdStrike, NVIDIA, and others. Stay with us.
now for a news update. Pippa Stevens has that for us. Morning, Pippa.
Good morning, Sarah. French President Emmanuel Macron announced this morning that France will increase its number of nuclear warheads in what would be the first addition to its nuclear arsenal since at least 1992. France is the only nuclear power in the European Union, and Macron's speech comes as several EU leaders have voiced concern about U.S. comments to defend Europe under the so-called nuclear umbrella. Venezuelan opposition leader and Nobel Peace Prize winner Maria Machado says she will return to her home country in the coming weeks and that elections will be held. But Secretary of State Marco Rubio has said Venezuela needs to go through phases of transition and has not said there could be elections there in the short term. And Live Nation, the concert company that owns Ticketmaster, in court today for an antitrust trial, accusing it of operating an illegal monopoly. The DOJ argues Live Nation has used its dominant market position to stifle competition and drive up ticket prices. Live Nation denies the accusations. Carl?
Pippa, thanks very much. Up next, we're live outside Anthropic's headquarters in San Francisco after the company was blacklisted Friday by the Pentagon. OpenAI now signing a deal with the DoD. Also comments a while ago from the Treasury Secretary on ways to extract Anthropic from their operations.
Yeah, I mean, it's been a real pushback by the administration. Plus, later this hour, JP Morgan's global head of capital markets on AI disruption, the deal environment, private credit concerns, and how this global conflict is impacting investor sentiment. We'll be right back.
The Department of Defense now striking a deal with OpenAI to use its AI models. The company stepping in after the president ordered the government to stop using Anthropic, their main competitor. Our Deirdre Bosa is live outside of Anthropic's headquarters in San Francisco for today's Tech Check. Morning, Dee.
Hey, good morning, Carl. So there are fresh chalk messages of support out on the sidewalk here and in front of OpenAI headquarters. That is new because the story is still moving very quickly. Just in the last hour, Treasury Secretary Scott Bessent announced the department is terminating all use of Anthropic products, saying, quote, no private company will ever dictate the terms of our national security. So this is now spreading beyond the Pentagon. The administration is making an example of Anthropic across the federal government. Anthropic, for its part, says that it will challenge that supply chain designation in court. And yet, the backlash is going in the other direction here. Over the weekend, Anthropic's Claude app, it hit #1 spot on the App Store, dethroning ChatGPT for the first time ever. So OpenAI may have won the government, but Anthropic is winning the narratives with consumers and developers so far. But this is far from over because at its core, this is about who should decide how the most powerful military on earth uses AI, an unelected CEO in San Francisco or elected officials and the laws that they pass. Now, a source familiar with the negotiations tells me that the real deal breaker for Anthropic was the surveillance piece of this. The Pentagon wanted to use AI to analyze bulk data on Americans. The current system, it shows where you've been, but add in AI and that becomes a lot more powerful. It can predict theoretically where you are going. OpenAI's deal only restricts private data, not this kind of publicly available data. And all of this matters because now the template for every AI military deal and what comes after it. This is sort of set the precedent. And it could also be a playbook for the labs as models are increasingly becoming commoditized. Anthropic is essentially building a moat based on values, not benchmarks. And across town, guys, OpenAI employees, they are heading into work this morning as well. They are being greeted by fresh messages on their sidewalks as well against the deal that Sam Altman signed over the weekend. And what's interesting, too, is a lot of the messages on the sidewalk there are directed towards OpenAI employees, asking them to use their voices and call out what's happening. And remember that nearly 100 of them signed a letter before the weekend backing Anthropic's position over their own company's deal. So how Altman responds to them may tell us a lot about what comes next.
Dee, it's one thing for the Pentagon to cancel your contract. It's another for them to then say, oh, also, you can't do business with any of our other vendors. On Friday, critics called that a form of corporate murder and wondered if it would have a chilling effect on tech's willingness to do business with the government.
It's such an interesting debate right now, right? It's who makes this call? Is it the government or is it a private company CEO? And that is certainly the part that Anthropic is challenging, saying that they're going to challenge that supply chain designation in court. And it's very split right now. I mean, OpenAI, Sam Altman, he saw the opportunity to take this deal. It's a $200 million Pentagon deal. But like I said, Anthropic is kind of winning the narrative here because the fact that they're willing to walk away from it tells, corporate America in particular, that they have a great model that the Pentagon wants, but now they're replacing or trying to replace, and two, that they will walk away from things based on principles. And that could be powerful. We're seeing that it's powerful with consumers already, and we'll see how this shapes up during the day because I think the employee piece is going to be really interesting. We've seen this in tech before with Google and government contracts. This is now playing out in the AI era where the stakes are arguably much higher.
Yeah, as Claude goes to #1 on the App Store. Dee, thank you very much. Deirdre Bosa. When we come back, JP Morgan's head of capital markets on AI disruption, the deal environment, private credit, plus how the fighting in the Middle East unpacks all of it. Stay with us. Take a look at the markets here as the Nasdaq went green, now followed by the Russell and the S&P. Opened this morning, we barely got below 6,800, and if you'll recall, levels around 6,780 are where we've bottomed 3 or 4 times, really, going back to Thanksgiving of last year. Of course, a lot of this is the industrials, all-time high, which would include your defense basket. Energy names, of course, was at one point the only sector that was green this morning.
And then technology, I would add. That's a third one. It's industrials, information technology, and energy that's helping the S&P. NVIDIA is actually having a comeback after, again, really strong earnings, but maybe not the reaction that you would expect after such a blowout report. Palantir also higher. No surprise, of course. Palantir does a lot of business with the Department of Defense, the U.S. government, when it comes to using its software on war fighting. But strength across Meta, Microsoft, some of the other mega cap names. Netflix continues its positive momentum after abandoning the deal for Warner Brothers Discovery. So there are definitely some pockets of strength out there. And I keep mentioning the U.S. dollar because it is also notably stronger. It's up more than 1%. So for those wondering if it was still a safe haven, yes, it is still acting as a safe haven when things get tough. Gold also still higher, in Bitcoin having a little bounce. That's why Jim O'Neill was saying that maybe this is just like a positioning thing happening right now because everyone was piled against it for a few months.
Yeah. Bitcoin getting almost to 70K once again would be the highest, really going back to, say, the 10th of February, moving names like Strategy, at one point the biggest gainer on the NDX. There's a look at the president and the White House as he's about to award the Medal of Honor to some U.S. soldiers, some of them posthumously, and we do expect him to make some comments on Iran. After really not giving much to the press last night, other than sort of a merry-go-round of phone calls to various reporters.
He's been speaking with reporters. He released that video, of course, late night when the attacks first started. But now military leaders are saying more forces are heading to the region. There is no word on how long this war could last. We have 4 U.S. service members confirmed killed in action as these operations now enter their 3rd day. So I think people are very eager to hear from the president in a live way. There are questions about what ultimately is the end game here and how he will define a success and how he will convince the American public that this was the right time to do this right now. Let's listen.
Thank you very much, Chaplain Green. Wonderful job. Appreciate it. And thank everybody for being here, and please feel free to sit. So before we begin this important ceremony, and there's no ceremony that can be much more important than this, let me provide a brief update on Operation Epic Fury. Today, the United States military continues to carry out large-scale combat operations in Iran to eliminate the grave threats posed to America by this terrible terrorist regime. Following our obliteration of Iran's nuclear program in Operation Midnight Hammer a short while ago, we warned Iran not to make any attempt to rebuild at a different location because they were unable to use the ones that we so powerfully blew up. But they ignored those warnings and refused to cease their pursuit of nuclear weapons. In addition, the regime's conventional ballistic missile program was growing rapidly and dramatically, and this posed a very clear, colossal threat to America and our forces stationed overseas. The regime already had missiles capable of hitting Europe and our bases, both local and overseas, and would soon have had missiles capable of reaching our beautiful America. The purpose of this fast-growing missile program was to shield their nuclear weapon development and make it extraordinarily difficult for anyone to stop them from making these highly forbidden by us nuclear weapons. We were the ones that were complaining. We were the ones that wanted it stopped, but everybody was behind us. They just didn't have the courage to say so. An Iranian regime armed with long-range missiles and nuclear weapons would be an intolerable threat to the Middle East, but also to the American people. Our country itself would be under threat, and it was very nearly under threat. I was very proud to have knocked out the Iran nuclear deal by President Barack Hussein Obama. That was a horrible, horrible, dangerous document. They would have had nuclear weapons 3 years ago, and they would have used them. But I'll not let that happen. For almost 47 years, this regime has been attacking the United States and killing Americans. Every time you see someone with missing arms and legs or a face that's been absolutely shattered violently, it was almost certainly caused by an Iran roadside bomb. They were put there by General Soleimani, who was the father of the roadside bomb. Very proudly, he thought, but I terminated him in my first term. This was our last best chance to strike what we're doing right now and eliminate the intolerable threats posed by this sick and sinister regime. And they are indeed sick and sinister. Our objectives are clear. First, we're destroying Iran's missile capabilities, and you see that happening on an hourly basis, and their capacity to produce brand new ones, and pretty good ones they make. Second, we're annihilating their navy. We've knocked out already 10 ships. They're at the bottom of the sea. Third, we're ensuring that the world's #1 sponsor of terror can never obtain a nuclear weapon, never going to have a nuclear weapon. I said that from the beginning. They're never going to have a nuclear weapon. They were on the road to getting one legitimately through a deal that was signed foolishly by our country. And finally, we're ensuring that the Iranian regime cannot continue to arm, fund, and direct terrorist armies outside of their borders. And we thought we had a deal, but then they backed out. And they came back, and we thought we had a deal, and they backed out. I said, you can't deal with these people. You got to do it the right way. Today, we grieve for the 4 heroic American service members who have been killed in action and send our love and support to their families. In their memory, we continue this mission with ferocious, unyielding resolve to crush the threat this terrorist regime poses to the American people, and a threat indeed it is. We have the strongest and most powerful, by far, military in the world, and we will easily prevail. We're already substantially ahead of our time projections, but whatever the time is, it's okay. Whatever it takes, we will always, and we have right from the beginning, we projected 4 to 5 weeks, but we have capability to go far longer than that. We'll do it. Whatever somebody said today, they said, oh, well, if the president wants to do it really quickly. After that, he'll get bored. I don't get bored. There's nothing boring about this. Do you agree with that, Pete? I don't think there's anything, Mr. General. I think there's nothing boring about it. Somebody actually said from the media, I think he'll get bored after about a week or two. No, we don't get bored. I never get bored. If I got bored, I wouldn't be standing here right now, I guarantee you that, to go through what I had to go through. We also projected 4 weeks to terminate the military leadership, and as you know, that was done in about an hour. Schedule there by a lot. But please join me in thanking every American service member who bravely is standing in harm's way. They really are incredible, and I just want to thank you. We have a lot of them right here. Thank you very much. Thank you. Thank you, everybody. We have a lot of great service members here with us, too, in this beautiful building. Isn't it beautiful? We're adding on to the building a little bit. We're improving the building. See that nice drape? When that comes down right now, you see a very, very deep hole. But in about 1.5 years from now, you're going to see a very, very beautiful building. And there's your entrance to it right there. In fact, it looks so nice, I think I'll save money on the doors, because it can't get more beautiful than that. I picked those drapes in my first term. I always like gold, but I think we can save a lot of money. I just saved curtains. But, and it'll be spectacular. It'll be the most beautiful ballroom. I believe it because I built many a ballroom. I believe it's going to be the most beautiful ballroom anywhere in the world. And when you hear all that hammering out there, you know why the First Lady is not thrilled exactly. She said, will the pile drivers ever stop? You know, they go from 6 in the morning.
President Trump, he is there to award a number of Medal of Honor to some of the members of the military, but did kick off starting about the war in Iran, the strikes by the U.S. and Israel over the weekend, talking about some of the objectives in this war, to annihilate the Iranian Navy, ensure the #1 sponsor of terror can never have a nuclear weapon, to stop the Iranian regime from funding and directing terrorists. He talked about the timeline a little, saying we projected 4 to 5 weeks originally, but he's not going to get bored and he will be there as long as it takes. Our Eamon Javers in Washington also listening in here to the president as he addresses what's happening in the Middle East. Eamon.
Yeah, Sarah, so striking to listen to the president as he lays out the predicate for this war. And I'm sitting here at the White House just thinking about the last major war in the Middle East, the war in Iraq back in 2003. And the predicate for that, exactly the same as the predicate that the president just laid out here for Iran. The idea that this is a Middle Eastern country that could have weapons of mass destruction, a nuclear weapon. This is a country that could potentially strike the United States. All of that rhetoric almost carbon copy the rhetoric of the U.S. government leading up to the war in Iraq so many years ago. The big difference here, though, Sarah, I would say, is that this president clearly does not seem intent on an occupation of Iran, at least for now. We haven't seen any evidence of major ground movements toward Iran. So this does not seem to be following the Iraq script in that respect. The idea here from the president, as he talked to reporters over the weekend, is that he might work with the regime remnants, those officials who were able to survive the initial wave of attacks. If there are officials there who want to talk to him, the president has said he's willing to talk. That is a big departure from the script that the United States used in Iraq back in 2003 and 2004. So similarities, echoes maybe, of what we've seen in a previous generation, but this a very different time and a very different president, Sarah.
And I think we learned from Secretary of War Pete Hegseth's remark earlier, Eamon, that they've learned from that, right? He said this is not going to be Iraq. We are not going to be in here indefinitely doing a sort of tough regime change. But I think there are questions onto what the end game and end date, Eamon, might be. So is the president set to speak with lawmakers as he's facing a number of votes in Congress?
Yeah, we expect that the president is going to be working the phones with lawmakers up on Capitol Hill. He did not consult with Congress of this. We know that they did notify the so-called Group of 8 after the fact. A number of Democrats have come out on Capitol Hill with some concerns about this. And you're right, you did hear Pete Hegseth saying earlier today this is the opposite of the war in Iraq. And I think the question domestically now politically for this president is going to be about his MAGA base, whether or not they continue to support this. One of the great appeals of President Trump to the MAGA base was his argument that previous generations of sort of globalist, internationalist Republicans had been wrong. The war in Iraq was a bad idea. And this was a president who was not going to get us into endless foreign wars. Now he has done so, and they're arguing this is different. So we'll see if that works politically.
Yeah, people have been going back to his 2020 comments. We spent $8 trillion in the Middle East, and we're not fixing our roads, our schools, our hospitals. How stupid, he said at the time. Eamon Javers, thanks for that. Let's get to Scott Wapner and the half.
All right, Carl, thank you very much. We, of course, begin with breaking news. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, we are following the markets and the reaction to the conflict with Iran, trading the fallout from that ongoing military operation, which you just heard the president speaking about. The investment committee is here, of course. Joining me for the hour today, Joe Terranova, Stephanie Link, Jim Lebenthal. Also with us for the full hour today is CNBC senior markets commentator and overtime co-anchor Mike Santoli, so we'll lean on his market expertise through the next 60 minutes as well. It's great to have all of you here with us today as we take a look at, Joe, what's a very, very interesting market day as we've turned a bit. NASDAQ is now green, as is the Russell. So the Dow and the S&P obviously are well off their worst levels, and we're watching a number of different asset classes from oil, of course, to the metals et cetera. What are your thoughts here?
So I think you have to ask, what is the message in the price action that we're seeing today? And I truly believe that the market did a very efficient job in pricing in a premium over the last month for energy prices and for bonds. And for whatever reason, certainly equities were discounted over the last month. So that puts you in a position today where what could be perceived as a significant geopolitical shock that acts as a catalyst for a precipitous decline in risk assets is not unfolding, and we're kind of just back to where we were last week, understanding where the opportunities potentially might exist in the marketplace. I also think it's interesting that it is the Mag 7 that once again are coming to the rescue on a day like today. It is Apple, it is Nvidia moving higher, it's Microsoft, it's Alphabet. So if there is ultimately an equity safe haven, those names once again prove themselves to be exactly that.
The commentary, Mike Santoya, I'll come to you here just to lean on you for a moment, seems to be anything from briefly the markets will react, a geopolitical shock. You point out today in your original pitch of the day that these tend to be short-lived. Yes. In terms of a market impact.
And I think everybody had 2 days to sort of absorb the history of this, and it's eventually, and often not very long after the event, a buying opportunity. Nobody even allowed much of a dip to occur this morning before essentially buying it. I always try to ask, what do you think the market ought to reprice in the response to this kind of event? Brent crude going back to levels we saw last June was probably not going to radically alter the picture. As Joe mentioned, we have been sort of clenching up in advance of this. You had a 21 VIX going into the weekend when the S&P's been flattish. I do think it's, though, instructive to kind of see how the market's doing it today. More stocks are down than up. You actually have a mix of the sort of counter trend rallies in some mega cap tech, along with beaten up software and credit-sensitive investment banks, along with the usual energy going up, defense stocks going up. So the market's doing what it's been doing for a very long time, which is selling one thing to buy another, and essentially rotating away from danger and keeping us in the range. So I don't think we have any kind of an all clear based on the issues we've been grappling with for a few weeks, but you also saw not much of an exacerbating factor coming from what happened over the weekend.
The new variable, of course, is energy, which is being discussed as well. As you see, Steph, both Brent and WTI rise substantially today. Wells Fargo declares the worst case scenario for the market would be an S&P 500 falling to 6,000 if, in fact, you do have a significant oil shock. If you have a prolonged closure, they talk about, of the Strait of Hormuz, that you could see oil above $100+ a barrel. And then, of course, that would mean something more significant for the equity market.
So first, I think it's pretty remarkable that we have thrown so much at this market. Venezuela, SCOTUS, AI, software, banks, the whole thing. And guess what? S&P 500 is flat on the year. And the equal weight is up 6% on the year. And it speaks to a resilient economy and also speaks to just really strong rotational action that we're seeing in a lot of different groups. And it's, and Mike, you mentioned it, that there are a lot of groups that are participating today. There are plenty that aren't, but there are a lot. It's not just Mag 7, it's financials. It is energy, some materials, some software, but that's actually a very healthy sign in my mind. So still have a lot of unknowns. You asked about oil. Watch oil. I actually thought, Scott, that oil was going to be up $10 to $20 today, yesterday at this time, and up almost $5. I mean, of course, oil has rallied 19% year to date in expectations, but if we got another $10 or $20 upside in oil, that would be very problematic. The other interesting note is that the 10-year hit 392 yesterday. It's now at 404. So that's sort of kind of interesting to me, too. Like, we're not seeing a massive panic.
Like the traditional safe haven run to bonds, and then you'd see yields fall. In fact, it's the opposite. Your points are well made.
And I would just say one last thing. Credit spreads. Credit spreads are okay. They're a little elevated, but they're nowhere near COVID, or they're nowhere near Liberation Day. So that, to me, seems like a pretty good outcome.
We'll have more just past the bottom of the hour on the fallout in the energy markets, the whole complex, when Mark Fisher joins us of MBF Trading. He, of course, such a great mind and a famed energy trader across the board. He'll join us with his insights and where he thinks all of that could be heading and how he is trading it. And we'll do that again just after 12:30. You know, Jimmy, I guess a lot of this depends on how long this persists. The president, you just heard, suggests could be 4 to 5 weeks. We have the capability to go longer if we need to. I thought it was interesting that the president told CNN within the last hour that the, quote, big wave is yet to come. So, you know, we're watching all of that, and that in some respects will dictate how these various asset classes move.
Yeah, and that creates a lot of uncertainty. I'm very pleased with how the markets have responded across the board today, whether it's equities, whether it's fixed income. Crude oil is honestly not that bad. Most importantly, the dollar has been stable. I thought that might be a referendum by the rest of the world on U.S. foreign policy, but it's basically flat. But 4 to 5 weeks for a military operation is a long time. This is not an overnight, over the weekend operation in Venezuela. This is not even Operation Midnight Hammer from June of last year. I think it was June. It was the summer when we bombed the nuclear facilities. And a lot can happen. The biggest wild card, I think, Iran is obviously trying to draw regional countries into the fray by attacking Qatar and United Arab Emirates. So far, they have been restrained in their responses, but you don't want to see this become a regional conflict. Right now, it's really just the U.S. and Israel against Iran. All of this being said, you know, we have experience over the last 4 years that really hot conflicts in places like Ukraine, Hamas, Lebanon, that these have not upset consumption here in the U.S. These have not upset capital expenditure plans here in the U.S., whether it's data centers or whether it's manufacturing onshoring. And a somewhat trivial point today, but would have been important if not for the weekend news, is the ISM manufacturing survey is nicely into expansion for the second month in a row, which indicates that there is very good economic strength here in the U.S., unlikely to be upset by the current events unless they get meaningfully worse.
Well, Joe, most are, you know, the commentary I read from this morning is a suggestion not to bail on the story. You know, and the story is that there's enough to build on to keep the market moving higher once you get past the obvious volatility that comes from times of war. Julian Emanuel of Evercore says more earnings plus more volatility equals more upside. Delayed, not derailed. He raises his S&P earnings estimates. There's a couple of notes from Ed Yardeni today that I thought were particularly interesting. We wouldn't be surprised if any sell-off in the morning turns into a rally. That's one thing. And then he also goes further and says in our short war scenario, of course, who knows how long this will progress, oil prices should fall in the coming weeks after a ceasefire, boosting consumer spending, benefiting global economies. The weekend's Middle East developments make us even more confident in our roaring 2020 scenario.
Yeah, I'm a little bit more aligned with what Mike said before, where I don't think you have the all clear here. I think you just get the pass on you don't break down because of a geopolitical shock. I think we continue to have what I characterize it as rotational volatility. That's been the story all year. It's not exit volatility. It's not like people are moving to the sidelines. So I think today it's just, all right, the geopolitical shock presents itself. We don't break down precipitously. You kind of go back to where you were. I don't know if I see us going very far on either side for the S&P 500 of unchanged. I think to Steph's point, the S&P equal weight, yes, that could carry itself higher. That seems to be where the leadership is so far year to date. But I just don't think you want to get too high or low in either direction. I think that's the story so far of this year.
That's because, Mike, you just don't know whether this is 4 to 5 weeks or 4 to 5 months. It's just too early to tell if it's a sustained conflict of that level of magnitude, which is why Barclays today suggests it's simply too early to buy any dip until you get a sense of how long this really could last.
Yeah, and I think that was premised on the idea we might get a little bit more of a messy downside open today and sort of wait for it to settle out. But I agree with that. I think you can go on the premise that the market at this point is building in an expectation that this is not going to be either long-lasting or particularly disruptive, whether through the oil price or trade flows or anything like that. And so therefore, you test the news flow against that assumption, and you assume that the market would have to, adjust if in fact it looks like it's getting worse or the disruption is starting to build on that. So I do agree. I mean, I think it's worth remembering that Friday, and who knows how much of this was anticipation of something over the weekend, it had a real growth scare feel to the market.
Sure.
I mean, it was staples, it was defensives rallying, it was a huge bid in bonds, and you do have parts of the cyclical trade have really fallen away. It's only industrials that are really holding up their end of the bargain. You have a 6-month chart of industrials, consumer discretionary, and financials on an equal weighted basis. That's what you have. You have industrials doing the work right now. It's not like the other ones are completely falling apart, but they're not really carrying the weight to the upside. So maybe that's opportunity, maybe that stuff's gotten cheaper, but I do think even today, you see travel stocks, you see consumer related, you see housing related, not really holding up.
Yeah.
Well, I mean, I want to ask about energy, want to ask about materials, even if you strip away today because there's an obvious movement. Don't you think that there was some positive momentum before today in those sectors as well?
Well, for sure. I just don't read that as principally about the domestic macro story getting better, right? So it's a global reflation trade. There's no doubt about it. We came into the year kind of positioning for that, and I think that was part of it. Plus, every sector that was under-owned and really small within the S&P has received this flood of money coming out of tech. And if you looked at the charts of consumer staples, materials, and energy, it's the same chart. Like, they basically have had the same trajectory of move in the last, month or two. So I think that's why the other dynamic, it's hard to pull apart what the macro story is in energy and materials aside from reflation, commodities, supply, maybe we're going to get disrupted.
We have seen a growth scare. Right. The Atlanta Fed tracker was at 5.3%, and it's now at 3%. And it could even go a little bit lower because January was really crummy for retail sales and auto sales. And you can blame it on weather. We'll have to see. So we are seeing a little bit of a growth scare. So it makes a lot of sense. I think, though, that you're going to see a rebound from the first quarter into the second quarter, especially as we get more fiscal policy from the one big, beautiful bill.
The problem is, you still have those issues that are making people nervous. On the heels of the block job cuts, you still have a greater conversation now in the zeitgeist about what is AI going to truly mean to the American workforce. That's number one, and that's not going to be known for some time. And every incremental company you hear about cutting a significant number of jobs is going to reverberate in its own way through the markets. And then, of course, private credit is still on the minds of many. I know you were talking about credit spreads. They had widened, and they're worrisome to some. They're being watched. There's no question about that. By the way, Jamie Dimon is coming up later this afternoon with Leslie Picker. I think it's at 1:40 p.m. You don't want to miss that because I know that she is going to ask Mr. Dimon about what is currently taking place in private credit. We'll get to that in a minute. What I want to get to, though, are the tactical sort of decisions that you're making and other investors may be thinking about and or making themselves today. You bought the Israel ETF again.
Yes.
So let's just discuss that for a moment. It's the EIS. Take me through that, something you had owned before. Now, why again now?
Over the last several years, I have traded this, obviously, from the long side. I believe this is a moment where it is at an all-time high. It is up 5% today. I think you have to ignore that. I think you have to look at this on a secular basis and say, where is this going to be over the next 2 to 3 years? The composition of it is exactly the exposure that I believe right now works in the market. It is healthcare, led by Teva Pharmaceuticals at 9% holding. There's some banks in there at a 15% holding. Then you get a little bit of exposure, and I lost my exposure to some of the cybersecurity names. You get exposure with CyberArk and Checkpoint. So I think you're going to see significant capital formation here in the Middle East, specifically as it relates to Israel. Obviously, my belief is this is a very favorable outcome for Israel when we're looking longer term. And it is worked in terms of price performance. It's proving itself once again today. And it's something that I had wanted to get exposure back into. And this is something I will hold not just for some months ahead. I think I'm going to hold this for several years.
You trimmed the OIH as well. We could discuss energy to some degree. Actual insights into the complex itself, I'd like to hold until Mark Fisher joins us just shortly after the bottom of the hour. He's got a great handle on how he thinks all these different parts of that complex are going to move in the days and weeks, if not months ahead. But why trim the OIH?
Because it was a leverage energy play for me. On January 12th, I took the initial position at 313. My cost basis has risen to 330. I've made several purchases, which I've announced with you on air, And when oil prices spike in the way that they did, this isn't my belief that they go higher or lower. It's just, okay, I have significant leverage in one particular position. It's now going my way. It's prudent to trim that. And all I did was take off 25% of the position. I already have about a 30% gain in the position since January 12th. It just makes sense. It's proper risk management. I think everyone would agree with that.
How closely are you guys, you two, Stefan and Jimmy, watching the energy positions that you have? It's a Chevron, Exxon for the most part, the big guys kind of game that you're playing. UBS is talking about the majors, watching both of those, how much an increase of a barrel price of crude means to after-tax earnings for both. Obviously, it's a significant jump for every dollar that you do go higher. You have Chevron, you have Exxon. How do you think about it?
Yeah, I mean, I like Chevron at 11 times EBITDA, and I think they're executing better than Exxon at this point. And so I was thinking about maybe trimming as well, but I think the valuation, the fact that this company beat on every single line metric that they reported just last quarter, the free cash flow that they're generating is enormous, double digits, and they actually just increased the dividend. So that's, to me, very positive. I also own SLB. SLB has more juice, but it's also up 35% year to date, too. So I was also thinking about maybe trimming that. But I just like the fundamentals. I like what they're doing, especially on the digital side, where their NNARR, recurring revenue basically, is running at about $1 billion at this company, and it's expected to grow to $4 billion over time. And so I like these two stories on a fundamental basis. They've had a nice run, but I just think I'm going to stay with it for now.
Yeah, so ExxonMobil, I have to start thinking about trimming it. That may catch viewers, that may catch you, Scott, by surprise, but here's why. It's just been an incredible stock, okay? And it's not just the 42% one-year return. It's that over the last 5 years, it has had a 25% annualized total return, 25% annualized. So it has simply grown to be too big in my portfolio. I still believe in the trade. There does have to be one fundamental note of caution here, which is to say before the weekend's events, we were definitely in an oversupplied situation globally in terms of crude oil. That was something that was liable to overhang the sector until this news came out. But for the moment, I'm going to ride it until I see it starting to roll over, and then I'm going to have to trim it. Now, I do think, and Steph, I think this was the point you were making, there are plenty of ways to play the energy sector. You're talking about SLB. I would look at Transocean, which I've talked about for quite some time, and I think for anybody who's a fundamental stock analyst, you simply look at where this company generates free cash flow from, the contracts that it has versus its valuation, and you say, yeah, I'm going to stay with this no matter where crude oil goes.
Let's take a look at the S&P now as well, which has gone green. And, you know, Michael, there was a lot of concern, consternation, watching of the screens in the banks last week.
Yes.
Did not end the week well, followed through negatively this morning, and we've had a turn. And it's worth watching. Goldman was not good last week. Goldman's now up 2%. You do still have these conversations about private credit. Lloyd Blankfein again over the weekend, again this morning, using the word a reckoning will potentially need to happen here.
Yeah, and the absolute kind of tip of the spear there on those stocks, they're not necessarily responding that well. We were showing Blue Owl before. The business development company ETF, BizD, is also to the downside. But I do think the market is in the zone of let's look at where you've had things get short-term overdone to the downside. I don't know that Jeffries is another example of that. We're straight down to the end of last week, and you do have a little bit of a bounce. So, I guess it's kind of like, we priced in a lot of potential stress. We're not seeing incremental evidence of it. It's almost like we got something else to worry about that's a little more front and center than is AI going to eat the world, and exactly how much erosion is there going to be in terms of credit quality in the private capital markets.
Oracle's credit default swaps are at the widest since the GFC. So that's an area.
And there's a huge wall of supply coming with new corporates. I think it's a bunch of things, LBO finance, and the tech companies are not going to stop issuing. So the market knows that they have to account for that.
These are so linked. I said last week multiple times, you can't talk about private credit and not talk about software. So you look at Oracle and the CDS, you've said that the market continues to make too much of the issue. that the concerns aren't nearly as deep as some would have you believe, and you stand by that?
It's a broad. You just painted with a broad brushstroke, so I need to narrow that a little bit. What I was specifically saying is in the realm of private credit, this does not appear right now to be a systemic credit crisis.
I was talking about private credit specifically.
Okay, I wasn't sure if you were talking about Oracle, which I would like to come back to.
No, I'm talking about private credit.
Okay, so there is a liquidity issue here, and we know what it is if you're offering, and I know Mark Lazary talked about this with you last week, Scott, if you're offering in some cases daily liquidity through publicly traded business development corporation stocks, then you've got a problem if the loans that you have are 3 to 4 years. Now, that doesn't mean that the whole industry is somehow tainted with a credit crisis. It means it needs to figure out its liquidity issues. Those liquidity issues in the short term are still going to stay in the spotlight. Why is that? Because we have upcoming redemption windows across many different product offerings from all of those companies, and everybody's going to be watching to see how many people, particularly from the retail channel, redeem, and how does that compare to new money coming in. So unfortunately, if you are an investor, as I am, in Apollo, or if you're in Blue Owl, the stock, the actual company stock, you're going to have to wait this out for a few months. But I don't think this is a credit crisis that leads to a long-term degradation in the stock price. It is something that's going to take a little while to fix.
Blue Owl, for since you use that as an example, has had a prolonged degradation in its stock price. And I thought Zuckerman had a good read today in the Journal about the big bets that the company has made in the very areas that seem to have the most acute issues in terms of public market perception right now.
Yeah.
The AI trade itself and the outsized bets that they have made on that and software data centers, et cetera.
Yeah. I mean, it was a good article. It was a summary article. It didn't produce new information that would have frightened me. And I am looking for things that might frighten me, okay? I'm not just head in the sand here. But it
that
also...
chart doesn't frighten you? I mean, it's, you cast this as, oh, it's just this too will pass. The stock's down 42% in 6 months.
Yeah. Look, I'm not in the stock, but
you mentioned it specifically, though.
Yeah, because it's the canary in the coal mine, or whatever you want to call it. It's the bellwether for the industry. But I do think that the sector, again, of which Blue Owl is a bellwether, it's going to take some time to heal. This is not something that I'm saying at the end of March this stock's going to be back on its feet because of what I said, redemptions. People are watching how many redemptions come out of the investment vehicles that are in Blue Owl or any of its competitors. And that's going to take time, much like with BREIT, with the Blackstone Real Estate Investment Trust from several years ago. It took months, if not quarters, to get through, but then it got through, and BREIT is back on its feet. I suspect that's what's going to be the case here as well.
I think there's more opportunity just in the big banks, because they've gotten hit really hard. The financial services sector is down 6% year to date, or sector year to date, and they don't have big exposure. They have exposure, don't get me wrong, but it's like 10, 12% of their total assets. In the meantime, remember JP Morgan actually raised numbers last week? So we're going to start to see numbers go higher for this group, and buybacks are coming. Basel III Endgame is coming at the end of March. That's the speculation at this point.
We'll squeeze in a quick break. We'll come back. You know about travel stocks, obviously down today. Airlines are weaker. Who better than Phil LeBeau to give us an update on exactly what is happening in that space? And later, of course, our headliner, the famed energy trader, Mark Fisher. He joins us live on the latest moves in that space and where he sees everything heading from here. We're back after this break. All right, welcome back. Airline stocks under pressure, as you might imagine, following the weekend strikes in Iran, ones that do continue, of course. Phil LeBeau joins us now with how we as investors should be thinking about all of this. Phil?
It's sort of a wait-and-see mode, Scott, at this point. When it comes to the flights in the Middle East, here are the latest numbers from Cirium, and these are just cancellations across the Middle East today, a total of more than 1,500 flights. That's about 41% of the schedule for today, with Saudi Arabia and the UAE. They have the biggest impact, with more than 1,000 flights canceled for those countries. We know what's going on, by the way, with Emirates and Etihad, essentially shutting down their networks. They're not really flying in and out of Dubai right now. Understandable given the situation. As for the American carriers that fly into the Middle East, Delta, American, and United, that's the focus here. All of them down anywhere between 2.5% and 3%. The main problem for these gentlemen, or these airlines, I should say, is the fact that they've canceled their flights here for the next week, whether it's to Israel or to Dubai, but they have to do that because they don't know the situation, and jet fuel prices adding to the pressure on the airline stocks. We talked about this last week. This is one of the primary reasons why you see the airline stocks under some pressure here in the first quarter. Very little is going as planned for the first quarter, whether it's been the storms on the East Coast, jet fuel prices, or now the situation in the Middle East. And I know there will be some people, Scott, who will sit there and say, well, look, how much of the flight schedules for United or Delta go to the Middle East? It's only maybe 0.5% to 1.5%, depending on the carrier. But the longer this goes on, that has ripple effects. And these have been areas where all of the airlines have been looking to grow their exposure. The Middle East has been a red-hot market, especially when you talk about Dubai. That's a market that we've talked about it for years. It continues to grow. Well, that's essentially shut down right now. Does this last a couple of days? Does this last a week, 2 weeks, 3 weeks? That's the reason for the pressure on the airline stocks today.
I mean, as you've seen in the past, I would assume that you would agree, if nothing more, in the earliest stages, because as you say, the market to those areas is reasonably small, considering it's a hit to confidence, if nothing else, and that's what's more reflected in the stock prices than the cutoff in flights to the region.
Oh, it's not just the region. It's mainly the first quarter. Remember when we were talking with the airline executives during earnings in January? They were also optimistic that 2026 was going to be record profitability, and it still may work out that way. But the first quarter hasn't gone as planned, Scott. You had the storm shortly after we talked with the CEOs that essentially shut down the eastern half of the United States for a couple of days. That's going to be a big hit. Then you add in jet fuel prices moving higher. Then you add in the Middle East. I think within the next couple of weeks, when we hear from these executives at, like, say, JP Morgan's analyst conference within a couple of weeks, I wouldn't be surprised if we see new guidance from these guys.
Phil, I got one more thing for you, too. I mean, not on your list, but maybe something we need to think about. AI-related job losses. I mean, if you start taking away jobs, number one, that's a hit, and a willingness by business to travel like they have in the past, front of the airplane being the cash cow for these airlines now more than ever, isn't that an impact potentially to keep our eyes on?
Potentially, but I should point out that when we talked with Scott Kirby, when we talked to Ed Bastian, Robert Isom, all three said that they have seen very strong demand for corporate travel. At least that's what they had seen as of the end of January for the first quarter. Could that change? Yeah, that's a possibility. But I think when it comes to these business trips that are being made, Scott, it's similar to what we saw with Zoom during the pandemic. Could there be an impact? And there was an impact. But ultimately, nothing beats face-to-face travel, especially for those executives who are closing deals or making the connections that need to be made.
But fewer people, fewer faces talking to fewer faces is a potential issue. Phil, thank you very much. We'll follow the story, of course.
You bet.
That's Phil LeBeau with the update on the airlines. Let's get an update now on the headlines with Christina Partsinevelos. Hi there.
Hi, Scott. The late civil rights leader, Reverend Jesse Jackson, is back in his home state today as part of 2 weeks of events to honor his life. He's lying in state at the South Carolina State House after dying last month at the age of 84 years old. Jackson's body will be returned to Chicago next for a large celebration of life and final homegoing services at the headquarters of Rainbow Push, the social justice nonprofit organization he founded. Ukrainian President Vladimir Zelensky says U.S. brokered peace talks with Russia are still set to take place this week, despite the war in the Middle East. He said Kyiv was considering a new location for the negotiations, which had been due to take place Thursday and Friday in Abu Dhabi. And India and Canada agreed today to boost economic cooperation in a bid to reset ties, nearly 3 years after Canada alleged India was involved in the killing of a Sikh activist near Vancouver. The two countries say the partnership will increase bilateral trade to $50 billion by 2030. Scott, back over to you.
All right, Christina, thank you. See you in a bit. Christina Partsinevelos. Coming up, the Iran energy fallout. Oil and nat gas prices are higher today. Legendary energy trader and our halftime headliner, Mark Fisher, gives us his take next. We're back. Energy complex, a major focus today with oil prices, natural gas prices higher. For more on where things could go from here and how to trade it right now, we're joined by the famed energy trader himself, Mark Fisher. He's the founder of MBF. It's good to talk to you today. Couldn't imagine not doing so given these news events.
Hey, Scott. How are you?
I'm good. So I guess first, what do you make of the moves in, let's just take oil first, both WTI and Brent, $3 and $4 higher respectively off of their, off the big jump. What's the message in that?
Well, the message is if this was 5 years ago, 3 years ago, the price would be $110. So obviously, the marketplace realizes that there's a general oversupply. At least that's the fundamental view of it. And with all the added production being added by the Gulf states, this has kept a damper on, both crude and Brent.
But something that could occur in the Strait of Hormuz could change this, no?
Yeah, but I think the more interesting, not interesting, that may be the right word, but where everyone has no idea what can happen is, and that this is in gas oil, heating oil, and that you can see that all the cracks have blown out tremendously. While crude oil is only up $4, I think heating oil is up the equivalent of $12, right? And that could go much higher, which leads back to the point is, what is the real threat in the Middle East and from everything? And it's really the refinery capacity. You saw Saudi Arabia shut down their main refinery today, and with that, to me, is the biggest risk in this whole equation.
What do you make of the Qataris shutting down their LNG output? It's no small output. It's 25 to 30% of the world's natural gas supply is now offline. How are you thinking about that?
Again, that's the second part of the equation. But the Qataris, if things calm down, could go ahead and they have that supply can be put back on the market with a couple of days. The problem is, if God forbid something was to happen to the refinery capacity in Saudi Arabia because of a strike, and with no new production, no new facilities here in the States, and very little refineries being built because everyone wants to put these refineries out of business, the real risk is sort of like if you and I were building, if I was buying it, if we were going to make pizzas and there was plenty of dough and sauce, which is crude oil, but there weren't enough ovens, the price of pizza would go up anyway because there's not enough ovens. In the example I just gave you, the refineries are the ovens, and now the biggest oven in the Middle East just put themselves offline. Not to diminish the fact that what happened in Qatar, doesn't affect TTF and LNG prices in Europe, right? But to me, the bigger concern is refinery products, which heating oil creates jet fuel, and with the precarious position we're already in these product markets, that would be my number one concern.
I mean, you've obviously lived and traded through many of these geopolitical episodes, including ones that have taken place in the very same region with the very same players. What does history tell you on how long you should game out these kinds of moves in these kinds of markets before they settle back? Because I asked you the question in the context of someone like Ed Yardeni putting out a note and he says, and I quote, "In our short war scenario, oil prices should fall in the coming weeks after a ceasefire." Now, that might be something that's so obvious to many. I guess I'm asking you, are you in your own mind thinking that this is a short war scenario? Just how are you thinking about it in the context of how you've thought about similar incidents in the past?
Well, similarly, that's what happened is the market has reopened and immediately corrected itself. When we had the Iraq crisis, price was $31 overnight, opened up at $20 the next day. Here, I think the way I look at it is when you look at where we are in the markets right now, I don't know. I mean, I'm not in the military. I have no idea if this is going to be short or long conflict. But I do know that because of the various factions in Iran, even if there's a ceasefire, does that mean everyone's going to stop lobbing missiles from the IRGC? Does that mean everyone's going to play by the same set of rules? Or are you going to have renegades that are going to just, take matters in their own hands? I don't know. I'm not that smart. So to me, I would be concentrated on the product spreads. I would be looking at the refiners, because I think long term these refiners can be worth a hell of a lot of money. Because again, everyone needs the pizza ovens, and there's not enough of them. And they can be, and if you blow a couple of these out of the water, you can't just build them back in 2 minutes. This is not like a Lego piece,
And that's even from the public equity standpoint. If my viewers and those on my desk, some of whom obviously well, we're even talking about publicly traded refinery names, the ones that are at the top of the list, correct?
Right. Which I would leave to Joe and you guys, because what do I know? I know nothing about but. Market that's come off, that's acted like markets past, where it's buy the rumor, sell the fact, have been the metals markets, right? The metals markets opened up much higher last night and have come off substantially from the highs, right? Typically, markets that are going to correct, that's the pattern that you look for, right? But on the other hand, not that heating oil and gas oil have been basically in the same place or higher since last night. So again, to me, as my intuition and what, I don't know how many years of it, 40 something, more than that. Oh my God, I'm so old. Anyway, how many years of doing this, right? I would think that, everyone in Wall Street has, typically has been sell energy, buy metals. I don't know if that works anymore. On the other hand, every time, how many times are people going to get short energy, crude oil in the mid to high 50s and then get stopped out in the mid to high 60s and lose $10? It's happened 3 times already. Get short in the 50s, get stopped down in the mid 60s, or now in the 70s, right? And then what's the appetite going to be to get short again at $55? What are you going to make? $8, $10 to lose $10 and do it 3 times? So again, host this event and hopefully it ends sooner rather than later, and the world can get back to a stable environment. But to me, selling oil at $55 is a rogue's game, because we've seen it 3 times. Think about it. If you and I are playing in a poker game and we've lost 3 hands of doing it, are we going to do it a 4th time and a 5th time? At some point, you just got to say enough is enough. So I would think, to me, I'm concerned about, will everyone, when there's a ceasefire, is that going to be for everybody? Or are there going to be people, are there going to be renegades that are going to take matters into their own hands? In Venezuela, on the other hand, it looks like everyone's playing ball. It's a different story. Here, I don't know.
Well, we'll see how it plays out. There are a lot of unknowns, of course. Can't thank you enough for joining us, Mark. Thank you very much. It's Mark Fisher with his insights on what's happening in energy. You were pointing out to me right before the show, you're watching charts of tankers and prices and prices of stocks.
And you have to pay attention to that. Right now, as it relates to floating storage, we're probably 20% higher than we were over the last month. Very large crude carriers are seeing a significant premium right now on their cost. Up 700+% over the last year at some of the highest levels we've seen since 2008. So here are some of the names. It's Frontline, ticker symbol FRO. It's TK, ticker symbol TNK, and then also DHT. If you were to believe that there's going to be a significant disruption as it relates to the Strait of Hormuz, this is exactly where you would go. I don't foresee that happening, and I think the price action today and these stocks is telling you that. Remember, India, China, Japan, for them to get their oil, it has to come through the Strait of Hormuz. That's happening. I think Mark made an excellent point as it relates to the refiners. I think that's where you have fundamental tailwinds as it relates to where pricing is going to go.
Do you still have exposure?
I still have Valero. I'm holding on to that. You could go Marathon. Jimmy, I know you like that one. You could also go Phillips. That's one of Josh's names. I think that actually is the best trade of everything collective we've talked about surrounding energy.
Okay, well, that's why those stocks are the ones that are reacting the most. All right, we'll take a quick break. We're back right after this. alert for you. JP Morgan's global head of capital markets talking some private credit concerns just moments ago with our very own Leslie Picker, who's gearing up for her own interview with Jamie Dimon later this afternoon. Hi, Les.
Hey, Scott. Yeah, I just sat down with Kevin Foley here at the JP Morgan Global Leveraged Finance Conference in Miami Beach, Florida. I asked him about what's going on in software and AI right now and how it's affecting their deal flow. He said the challenge is that, quote, people are painting with a broad brush and making a lot of assumptions, noting that we need to be more nuanced.
The AI disruption theme is an impact across the entire credit markets, right, and across all industries. So there's software exposure in the broadly syndicated, there's software exposure in the private credit. There are other businesses that can be negatively impacted. There's also a lot of other businesses getting positively impacted by this. So I think it's part of what I would call a natural adoption of technology over time. We've seen this in other cycles. Just like the economic cycle, the credit cycle has a default cycle to it, and we go through that. So yeah, perhaps during this transition to an AI world, we're going to see some disruption and maybe we see some elevation of defaults. But that's natural, and that's going to happen in whether it's a broadly syndicated market or a private credit market.
Foley said we've gone quite a while without a big uptick in defaults, so history would say that we're late in this cycle, but he noted that the economy is still strong, which of course bodes well for credit quality. As you mentioned, Scott, we'll be sitting down with Chairman and CEO of JP Morgan, Jamie Dimon, from this very conference in about a half hour's time. I'll send it back to you.
Forward to that very much, Leslie. Thank you. We'll do finals next. All right, it's a first for all of us this weekend. Berkshire's first earnings report without Warren Buffett. Michael, stock's down 5%.
It is, which is one way you know it's not a pure risk-off day because it's the ultimate defensive stock. You probably have a bid in it. It wasn't a great quarter. There was sort of a net decline in profits from the operating businesses. Nothing too surprising. I thought that Greg Abel's letter kind of hit all the notes you would have expected about maintaining the culture, having the same type of investment discipline. If you're reading between the lines, he's spotlighting some maybe underperformance at the non-insurance businesses. Obviously, the railroad has margins that lag. He's put somebody in charge of the sort of consumer businesses. So you could sort of say he wants to raise the metabolism of the operating businesses. I do think there's going to be questions about all the cash, $370 billion. Yeah. When it's sort of potential energy for the greatest investor of all time to do something with, investors are okay with it. If not, maybe not.
All right. I'll see you a little bit later. Thanks for being with us today for the hour. It's great having you. What's your final trade there, Farmer Jim?
Lockheed Martin, we're obviously going to be restocking missiles.
Okay. Steph, is that you with Netflix?
Yeah, I don't own it yet, but we now can focus on the very strong fundamentals.
Well, you said you don't own it yet?
Not yet.
Leading us on a little bit?
Yeah.
All right. Well, if you buy it now, you're going to buy it higher than it was a couple weeks ago.
Maybe.
Joe.
Farmer Jim should own some CF Industries.
Maybe he does. All right. I'll see you at 3.
Thank you very much, Scott, and welcome to The Exchange. I'm Kelly Evans, and we have a huge reversal in markets today. Take a look at the action here at 1 p.m. Eastern Time. Stocks have staged a massive comeback following the attack on Iran over the weekend. The Dow was down 600 points last night, and at the lows this morning, even after we opened, it's now down 15. The S&P is positive by 9. The Nasdaq is up 0.5% right now, and the 10-year yield is back above 4% to 4.05. That may have a lot to do with some details in the ISM. We'll come back to that in just a moment. Take a look at oil as well. Big part of that reflationary, inflationary story. Crude, WTI, the U.S. Metric there, back up to 70 or so a barrel. It's a 5% pop. Meanwhile, natural gas is up. Here in the U.K., slightly more so, 40% in the U.K. And 32% in Europe after Qatar Energy, that's the world's largest LNG producer, did halt production after some drone attacks on key facilities. That's sending prices much higher overseas, and a little bit of an impact here. As for other signs of a flight to safety, we've got gold off the highs, still in the green, but by just 1% or so, as investors are looking for some of those safe haven homes. Around $5,300 for the gold price today. The dollar is still up about 1%. That's a big move to 98.5. That's the highest level in 5 weeks, and it's now positive on the year. But let's begin with the latest developments, what we know this afternoon on Iran. The president spoke just a short while ago, saying the U.S. will easily prevail in this war. Interestingly, not ruling out the presence of boots on the ground in an interview earlier today as well. And we've also heard officials insisting this will not be an endless conflict. Eamon Javers is live at the White House. Eamon?
Kelly, these were the president's first live remarks since the strikes began on Friday evening overnight, East Coast time here in the U.S. The president helming an unrelated event that was designed to award medals of honor to 3 U.S. service members. The president also beginning that ceremony with some comments on Iran. He listed U.S. objectives in the region, suggesting that the goal here is to degrade Iranian missile capacity, degrade the Iranian Navy, to stop the Iranian effort at a nuclear weapon, and also to degrade the Iranian capacity to fund terror networks throughout the region and around the world. The president also said that he's committed to this for the long term. Here's what he said.
Whatever the time is, it's okay. Whatever it takes, we will always, and we have right from the beginning, we projected 4 to 5 weeks, but we have capability to go far longer than that. We'll do it.
The president acknowledged the loss of 4 U.S. service members who have been confirmed killed in the fighting so far. Those all apparently killed in strikes by the Iranian regime on a U.S. base in Kuwait. We'll wait for more details on that strike as they come in. And the president here also suggesting that the United States is hoping for regime change in Iran. Not emphasizing that point here in the East Room, but over the weekend, the president suggested that he wants the Iranian people to rise up and take control of their country themselves. And the president also saying to reporters that he spoke to throughout the weekend that it's unclear who the new leader of Iran will be now that the leadership of that country, largely killed in attacks by the Israeli and U.S. governments over the weekend. It's not clear who on the Iranian side the U.S. will be dealing with, but the president has suggested, Kelly, that he's willing to talk to whoever emerges from this leadership vacuum that's in Iran right now. Back over to you.
All right, Eamon, thank you for now. We'll come back to you. Eamon Javers at the White House. The surge in oil prices is a particular area to keep an eye on. It comes at a delicate time for the U.S. economy. We saw a huge spike in the prices paid index of the ISM report just this morning, and the rise in core goods prices in the PCE on Friday, outside of COVID, was the highest since 1992. Our next guest warns that a stagflationary wind is starting to blow through the U.S. economy. Mohamed El-Erian is Chief Economic Advisor at Allianz and the former CEO of PIMCO. Mohamed, welcome to you. We're going to hear from a series of key voices this hour, culminating with Jamie Dimon towards the end of the program. Just your response to what you've seen so far with Iran and what you think might happen from here.
So I think in terms of economics, a lot will depend on the duration and the spread of the conflict. The longer it lasts, the more it spreads, the more stagflationary it is for the global economy. Now, the good news is that this global economy has absorbed shock after shock after shock in the last few years and has proven incredibly resilient. But we don't want to throw too many shocks at it. So keep an eye on the duration of the conflict, because that is going to both fuel inflation, disrupt supply chains, and undermine growth at a time when policy flexibility is limited, especially for the Federal Reserve.
I look over at the 10-year yield, which, it was below 4 a little bit, but that was both on the blowup of private credit and the initial flight to safety with Iran. Now that that's, kind of calming down to some extent, we see these inflationary reports, it's popping up again. The mortgage rate's back at like 6.15, something in that range. So what do you think happens with the 10-year? I mean, could we see it go significantly higher, back towards 4.5, even higher from here? Same thing with the inflation rate. I mean, I don't know what happens to the new Fed chair. Kevin Warsh is going to come in at a time when more people on Wall Street are saying maybe there's no more rate cuts this year.
Yeah, so there's a lot of uncertainty, as you pointed out. The immediate decision that the bond market had to make is, does it opt for flight to quality and safety and growth concern, or does it opt for inflation concerns? And it started opting for inflation concerns. We saw the 10-year move up 7 basis points, and then we got the strong ISM, and now it's up 10 basis points. So the bond market has mainly said, you know what, I'm more worried about inflation than I am about growth, than I am about flight to quality. Last week was all about financial instability, private credit, and also employment concerns. And that's why we went sub 4. So there's so many crosswinds. I think if you want to make a simplifying assumption, is we will mostly trade in a range of 4 to 4.5 unless we get a big financial issue.
Yeah.
And that financial issue would be some combination of the AI bubble and the private credit and the way they interact.
I'm almost thinking about it as a tug of war, where the private credit and private equity, I mean, the whole thing, that those who lend to software companies, that whole thing is going to be deflationary to some extent. But here comes this CapEx cycle. Here comes all of these things were already on the move higher, physical goods prices. That's why I mentioned those issues. The spike in oil prices today is relatively limited, but in some ways the larger story is that oil and energy has been the best sector of the year. This whole thing could continue because of the CapEx boom and supply side problems now emanating from this issue. In that sense, I think about the Jeff Curry idea that, we go through these rotations. Tech is dominant for a decade and then energy is dominant for a decade. And I just wonder if we're going to be in the latter.
So we're going through multiple short-term rotations. We no longer have a unifying theme like we did last year. Last year, we all fell in love with those working on AI, not with AI, that's this year's theme, but on AI. And it was such a dominant theme with unlimited upside that carried us through and acted as a shield to many things. This year, it's about rotating almost week by week from one theme to another. And I think we should expect that to continue. We no longer have a strong unifying theme that is in play right now.
Right. And just a final thought then, what are you going to be watching here? Is it, the response from Iran on much of the Middle East seems to have caught those countries off guard and perhaps prepared them to be more aggressive in continuing whatever the president has started here. Maybe they help finish. I don't know.
So I don't know about the geopolitics. I do know that it has come as a huge shock that within one day, you had 9 countries in the region involved in this conflict, beyond Iran, Israel, and the US, and then you had Cyprus as well. So I don't think anybody anticipated that it would spread so quickly. So, there's a lot of question marks about how it evolves. It's a very dynamic situation. But I think what's important is to always think in terms of supply chains. This will make companies think even more about resilience, even more about we need just in case supply management, not just in time supply management. And that in itself adds to what you started with, which is this inflationary bias that we're going to live with for a while.
That's a great point. Mohammed, thanks for making the time today. Appreciate it.
Thanks for having me.
Mohammed El-Arian with Allianz. Sticking with energy prices, it's not just oil spiking today. Nat gas prices are soaring in the UK and rising globally after Qatar Energy, the largest LNG producer, has halted production following attacks on some key facilities. Amrita Sen is founder and director of research at Energy Aspects. Amrita, do you share the point of view that this could now lend upward price pressure to oil, not just in the near term, but for some time?
Yeah, and you mentioned LNG as well, just to highlight that actually Qatar decided to curtail its production, not because of the attacks, to clarify. There's been a lot of misreporting in the media. It's because of the shipping constraints around the straits. What's happening is that ships, many ships, are going in and not able to come out, or not even being able to go in. So they have very limited storage. It got tank tops, and that's why they've decided to curtail production. It wasn't because of the attack. And that is something that's a genuine risk for oil as well, for the Iraqis, for instance, some of the other countries within the strait who are unable to divert production to other parts. Saudi Arabia and UAE can divert some of their production to Saudis, to the Red Sea, UAE to outside of the Hormuz, to the Fujairah port. They have some flexibility, a lot of others don't. And what you're seeing in Qatar for gas, the risk is you start to see that for oil as well.
And what would that risk be? You're saying that they can't get it in, or they can't get it out?
No, so what I'm saying is that ships across all vessel classes are, because of the war insurance, because of the attacks we've now seen on several, 4 or 5 vessels, either they're not coming into the strait or they're not going out of the strait, so they're stranded. That's why, for instance, Qatar had to shut in LNG production, because it just cannot load, and therefore it has to curtail production. Say for Iraq, that's a real risk that after they fill up their storage, which is already 50% full based on some of the satellite data that we track, that could fill up very quickly in a day or two, and then they will have to cut back production.
Because in the U.S., our nat gas price is barely moving, which suggests we will experience very little disruption. Our oil price is up 5% or so. Okay, so maybe there's more of an impact there. In the UK and in Europe, their natural gas prices are soaring, as you know. And is that because they are the ones likely to face supply shortages? And is there anything we can do or others can do to ameliorate that?
Of course, look, I think ultimately for oil, Asia is the biggest loser in this, because 80% plus of all Asian imports come from the Middle East, and that has to pretty much go through the Straits of Hormuz. So we've heard from refineries saying they might have to cut back on throughputs because they can't get the oil in time. So I think that's a bit which is really difficult to solve because of the choke points around Hormuz. Whereas for gas, Europe and Asia, both prices have soared because Qatar supplies to both. And this is where the US can come in to at least supply Europe. Again, Asia is a different story because of the routes involved, but US can definitely send more to Europe and help to lower the prices here instead of Qatar. I think that's where it becomes super important for security of supply.
Rita, where do you think this leaves China and Iran and Russia, which to a large extent have looked, because of sanctions or other things going on, to places like Iran for key energy supplies in recent years?
Yeah, I mean, China is Iran's only buyer, effectively, right? 1.5 million barrels per day. Right now, Iran still has over 30 million barrels floating. So the Chinese independent refiners can pull on that. So that gives them a little bit of cover, less than a month. But after that, if there's genuine disruption, China is going to be the one that's the biggest hit as a result of this. They've already lost access to Venezuelan oil, which was discounted. Now they will lose access to discounted Iranian oil. There's a lot of cheap Russian oil on water, don't get me wrong, but clearly that pool of cheap sanctioned oil is getting less and less for the Chinese, which means the cost for them has to go up.
All right, perfect discussion point we'll talk about after the break. Amrita, we'll leave it there for now, though. Thanks very much today. Appreciate it.
Thank you.
Amrita Sen there with Energy Aspects. Still to come, Jamie Dimon, the JP Morgan Chase chair and CEO, will join us first on CNBC. We'll get his reaction to the situation in Iran and, of course, to the private credit fears that have been roiling the markets. But first, Congress set to vote this week on potentially curbing the president's war powers. It's unlikely to pass, but our next guest says the president still may only have a few more weeks to run this operation. Dan Clifton joins us next to explain what he means by that.
This is The Exchange on CNBC.
Welcome back to The Exchange. As the old saying goes, all roads lead to Rome. And when it comes to America's recent geopolitical actions, our next guest says all roads may be leading to China. Let's bring in Dan Clifton. He's head of policy research at Strategic Research Partners. Dan, that's exactly the point that Amrita Sen was just making. We've cut off Venezuela's crude supply to China. Now here goes Iran. At some point, I mean, maybe we should just supply them and peace can reign.
Right. Well, first, thank you for having me back. You know, last week it was pretty clear the president was setting the tone at his State of the Union to do something in Iran. And obviously we got that this weekend. But I think there's a larger story here. The president's goals are very clear in terms of what the four things he wants to do. He wants to take out the ballistic missiles, the nuclear weapons, and dismantle the leadership. But at the end of the day, 17% of China's oil is coming from Iran and Venezuela combined. And I think the president's trying to get a very similar setup with Iran as he did with Venezuela. Now, we all know that that's much harder to do. There's many different factors to consider there. But if you start getting control of that oil and you start making it more difficult for China, then it becomes a lot harder for China to move on Taiwan down the road at some point overall. And so instead of going after China directly, you want to go after their proxies. And I would say the same thing is true about Russia.
What you just said is super interesting because a lot of people are assuming or imagining that if America does enough to eliminate our adversaries globally, who were to some extent allies of a China, then they might at some point feel the need to push back by, for instance, making a move on Taiwan. But what you're saying is that the calculus here, by affecting 17% or so of their oil supplies, maybe to actually make it more difficult for them to move on Taiwan. Why is that?
Well, that's exactly right. Like at some point they're going to move. And what the Chinese have been doing is using their proxies to weaken the United States. That's the Russia-Ukraine war. That's the October 7th. Now what you're seeing from Trump is the exact opposite. Trump is now saying, okay, I'll go after your proxies rather than you directly, and I'm going to raise the cost of you doing your global adventurism, and I'm going to lower the cost of us. And what I mean by that specifically is that the cost of the U.S. trying to do a two-front war, one with Iran causing all this mischief in the Middle East, and two, policing China with Taiwan, is becoming extremely cost prohibitive. So Trump's saying, I'm just going to get rid of that first front. I'm going to obliterate Iran for 4 weeks, make them weaker, get into a better policy deal, and then we can pivot and get right into China. And that's why all roads lead to China at the end of the day. And I think that's where Trump is trying to set this up.
I think a lot of people in the back of their minds when they looked at that buildup in the Mideast thought, well, I hope nothing else happens around the world because all of our assets are right there.
Right. Absolutely. And I think that's the strain. But again, when I listen to the president, he's saying, I got 3 or 4 weeks to do this. That's true. The president has a low approval rating. He has very little support for this war. Oil prices can go up. We're probably going to see American casualties. But circle that calendar, Kelly, because right at the end of that 3 to 4 week period is when Trump meets with Xi. And if he's got more cards in his hands in that meeting, I think it makes it a better meeting for Trump overall. And that means that he's going to have success, and there's no guarantee of success with this operation right now.
What do you think he would even be trying to achieve with this meeting, other than a visual sense of world peace, which he's kind of made an important part of his legacy, if you will? But what is he actually looking to do with the leverage that he believes he's built up here?
I think he's trying to build a collaborative economic environment where it's not just about peace. It's about we can all get rich together and we don't have to go and take everything else over. But I think in terms of this, if you read the Wall Street Journal, they've been very clear that Xi was going to ask Trump about taking Taiwan in this meeting, and that's never happened before. So I think that this may have been a much more confrontational U.S.-China meeting than what we've seen in the past. Even when they didn't get along, they kind of put on smiley faces. I don't think that was where we were headed this time around. And I think Trump's trying to say, look, you don't have as much leverage as you think you have. The U.S. has some leverage here, and this is the way that we're going to be doing business.
I didn't realize that world leaders got together to ask each other about that. I suppose what you're saying, he's not asking, he's telling.
Telling, yes, exactly right.
Yeah, and just waiting in order to gauge what the U.S. response might be, basically.
Absolutely. Absolutely. And the leaks in the media are designed to kind of get ahead of that and say, this is where we're going, be prepared for it. And Trump prepared in a way that I don't think anybody anticipated.
And quickly on, Dan, then on Russia, which of course over in Europe, that has been the predominant issue, is to what extent are those incursions something to worry about? And could they make a move further on the continent and so forth? And what do you think, if anything, is the Russian conclusion from watching the events here, Venezuela unfold, Trump's now hinting at Cuba and so forth?
Yeah, I think Russia is very different than China, Kelly, because every time Trump has made a move on the proxies, whether that was Syria or Venezuela, now Iran, Russia's just kind of taken a hands-off approach overall. They're so bogged down in Ukraine, I don't think that they have the capacity to make these other moves moving forward. There is a bit of a sentiment shift here in Washington where they're starting to think that there's a potential for a Russian-Ukraine deal that's going to happen. Now, I've heard that before, and it's never materialized, and I don't want to get too far over my skis on that. But, Iran was the biggest drone maker for Russia, and now that supply chain has been disrupted. There had been progress on the land deal. There had been progress on the security guarantee. Is this enough to then push you into a deal rather than the other way, if you asked about more Russian expansion? So I do think that the Russia and the China are very different in their proxies, in their capacity, China having capacity to move, Russia not having capacity to move. But that would be a real kind of unexpected positive event if you saw some sort of Russia-Ukraine temporary ceasefire or some sort of deal that emerged from this.
It's a good reminder. Speaking of supply chains, like Mohammed El-Arian said, watch the supply chain, and the drone one goes to Iran for Russia. That's interesting. Dan, thanks. Really appreciate it.
Thank you, Kelly.
Dan Clifton with Strategas, a Baird company. Coming up, today's market moves are somewhat muted to the dramatic events in the Middle East over the weekend. But my next guest is warning that oil prices could now stay elevated for years. We'll tell you why. And we're continuing to track this market rebound with the Nasdaq seeing a 2% intraday swing, the S&P trying to stay in the green, and the Dow erasing an early 600-point loss. We're back with much more after this. Welcome back. Oil prices are up today, but not as bad as some had feared. Still, my next guest is warning not to be complacent. He says this weekend's action could wind up threatening shipping in the Strait of Hormuz for months, if not years. And, quote, the world may need to completely rebuild oil production and transportation infrastructure in the Gulf. He recommends owning these oil carriers as an investment and is warning against exposure to technology stocks and even some international names. Joining us now is Marco Papich, macro and geopolitical strategist at BCA. Marco, first of all, really appreciate you being here. Thank you. And this is an interesting point because I always try to guess what folks like yourself are going to say. Maybe say, don't overreact here. And when I read what you're writing about and heard Amrita earlier saying, you know, if we need an alternative to this Strait of Hormuz, what does that look like?
It looks really bad, but that is not my base case scenario. Obviously, the base case scenario is that what President Trump is going to do is what he's always done, which is start big, shoot for the moon, and then settle for the roof of his house. So I think that it's very dangerous to commit oneself to any secular views at this point. President Trump could end the conflict whenever he wants. My concern is actually if regime change does happen. Regime change in the Middle East, outside of Egypt, although even there the jury's out, but outside of Egypt, regime change in every single country in the Middle East has gone terrible. And so this idea that Iran would flip from a Islamic theocracy to some form of, democracy, I think is highly unlikely, which means you will have a country at the brink of collapse, sitting astride this very important sea route for potentially years.
I mean, I assume the administration, the only Iran governance for the past century has either been this theocracy or the Reza Pahlavi, the Shahs that were overthrown by this theocracy with popular support by the people, only to repeat, so there's not really the vestiges there of something that would resemble any kind of Western institution making. And I presume they know that. So that all said, and you are kind of, to put it in trading talk, long, oil carriers and that kind of group. So you do see that there is a risk here, that there continues to be disruption, right? And it just, there are other reasons why the energy prices may be high, but any kind of ongoing disruption here would certainly add to that.
Well, I've been long since January 6th, so that's one of the reasons I just didn't want to book gains on this conflict, which actually goes against my framework. I tend to fade geopolitical events. But in this particular case, the problem is that it's very difficult to handicap the reaction function of Iran. Last year, it was very easy. I told my clients not to get excited about the Israel-Iran conflict, even once the US got involved. Iranian regime was actually never threatened existentially in any way, shape, or form. In fact, President Trump was very clear in 2025 that he did not want regime change. But since December of last year, he's changed his tune. And obviously now Iranian regime is backed up against the wall. So they have to illustrate to President Trump that there is a pain in trying to force them out of existence. And that's why the closure of the Strait of Hormuz is already relatively, here.
A fact, yeah.
Yeah, it's a fact. They've attacked 3 ships. They're spoofing the GPS signals of many crude carriers. And so, this could get a lot ugly, especially if they start focusing all their drone attacks simply on the ships, which are not that far away from their coastline. And one of the things we learned, from Yemen, is that if the Houthis can close the Red Sea for 3 years, I'm pretty sure Iran can do it for a couple of weeks at least.
Mm-hmm. And we talk about how maybe a $10 jump in the price of oil is 25 cents or so at the gas pump. People will feel it. And that's kind of what Dan Clifton was alluding to earlier. The president might only have a couple of weeks of, if you want to call it public support, before people start getting really frustrated about this, especially as we're getting other signs of inflationary pressures here. So what does the U.S. do to hasten an end here to, as we say, the theocracy is the only thing that's been in place there since at least 1979 or 1980. And prior to that, it was a monarchy. So I don't know what kind of, it must be something more analogous to a Syria or a Venezuela situation where they're just looking for somebody less hardline within the existing regime.
Ultimately, it's going to be in the eye of the beholder. And the eye of the beholder is President Trump. So I think that eventually he's going to figure out what you and I are talking about here, if he doesn't already know it, which is that it's very dangerous to try to have regime change in a country like Iran. You're really, honestly, the first person that's mentioned this, Kelly, in this conversation right here. Most people somehow have this image that pre-1979, Iran was a land of milk and honey, and they forget exactly what you pointed out, that people revolted against the Shah. Shah was a dictatorship.
Yes, and they were killing people in the streets. They threw him out. They brought, Khomeini back from Paris. He had 5 million people applauding when when his plane landed. And then there was a bit of a bait and switch when he landed. It was kind of a Xi Jinping situation. He said, I'm the supreme leader. All the other Arab countries should do the same thing. Iraq launches a war, and then 1 million people die. They have a baby boom only to grow up in the shadow of this horrible conflict. It's so unfortunate, but it does not leave a lot of options for modern institution building.
Absolutely. And in fact, what could happen, given the mountainous geography of Iran, given the fact that only 50% of Iran are ethnically Persian, what could end up happening is the worst case scenario, which is some form of a complete collapse into a Somalia example and scenario, in which case you have a country with multiple factions, some aligned with the US, some very much not aligned, astride this very important strait. So given all of this, I do think that President Trump is going to declare victory much faster than people think. This is my base case scenario. My base case scenario is not that the world is going to lose access to the Strait of Hormuz, because that would obviously be a very, very, very bad move. From a market perspective, what's interesting to me is that the very reason why US stocks have gone sideways, and while the rest of the world has done really well since October of last year, is that there's this rotation thesis. While US tech has worked for 15 years, nobody really likes it anymore. Let's go buy some value, cyclicals, Europe, Japan, and so on. The problem is that this conflict imperils that very thesis. And I'm not sure that anyone has appetite to go buy more SaaS companies. That makes no sense. So that's the risk to the market as well.
That's a great point. And, again, whether this now becomes a secular, longer-term investment thesis and things like energy partnering because of that, I think, come back, Marco, in a week or 2 or 3, maybe weekly, as we try to figure this one out. But your warnings are apt, and I appreciate it, kind of outlining some of the ways this may go today. Marco Papich joining us from BCA Research. We'll leave it there for now. Let's get to Seema Modi for the CNBC News Update. Hi, Seema.
Hi, Kelly. Good afternoon. Senator Bernie Sanders and Representative Ro Khanna introducing legislation today that would impose a federal wealth tax on billionaires. According to Senator Sanders' office, the planned tax would raise $4.4 trillion in federal revenues without hiking taxes on anyone worth less than $1 billion. A similar potential ballot measure in California has prompted some of the state's wealthiest to move or threaten to leave. In other news, a group of hackers calling themselves the Department of Peace reportedly claimed to have hacked the Department of Homeland Security over the weekend, leaking documents online. TechCrunch reporting the group published data relating to contracts between DHS, ICE, and more than 6,000 companies, including defense contractors. DHS has yet to comment on that report. And President Trump has this morning awarding the Medal of Honor to 3 U.S. Army soldiers, 2 of them posthumously, for their heroic actions during combat. The soldiers recognized for their bravery spanned much of the last century, from World War II to Vietnam to Afghanistan. Kelly, back to you.
All right, Seema, thank you. Coming up, Anthropic rejected the Pentagon's demands, so the military turned to OpenAI instead. We'll have the very latest on this conflict. Plus, JP Morgan CEO Jamie Dimon joins us in a first on CNBC interview. He'll touch on everything from the Iran conflict to the ongoing issues in private credit. We're back with much more right after this. Welcome back to The Exchange. OpenAI striking a deal with the Defense Department after the president banned Anthropic. Today, Treasury Secretary Bessent announcing his department will terminate all use of Anthropic products, saying the American people deserve confidence that every tool in the government serves the public interest. And under Trump, no private company will ever dictate the terms of national security. Deirdre Bosa is now live outside of OpenAI's San Francisco headquarters for today's Tech Check. And Deirdre, when Katy Perry is downloading, Claude, the public support that has broken out for Anthropic is remarkable over the weekend.
Absolutely, and that's what this is all about. On Friday, the action was outside of Anthropic headquarters across town, messages of support on the sidewalk. But today, the story has moved very, very quickly to OpenAI. So I'm outside of the OpenAI headquarters where people have been busy. Take a look at some of these messages on the sidewalk and chalk outside. Here's one: OpenAI is nothing without its people. When is it time to quit? Be brave. How far is too far? What are your red lines? And then, an American flag. This goes on quite a bit further down the street, as you can see. And rather than support, this is really a call to action. We spoke to some of the people who are doing this. They're not OpenAI Anthropics. They're not OpenAI employees nor Anthropic employees. They say they're simply concerned citizens about the direction that all of this is heading. And Kelly, this really goes beyond that Department of Defense contract we were talking about on Friday. You mentioned it. You've got Bessent saying that he's going to end any kind of partnerships or contracts with Anthropic. You've got the president saying that no government agency should work with Anthropic. And now it is designated a supply chain risk. So that is a very, very big step that the people I'm talking to are saying that's the part they take issue with, not the DoD dropping a contract, but this wider designation. Kelly, you mentioned this at the top as well. OpenAI may have won the contract, but Anthropic right now is arguably winning the narrative among consumers and developers. Of course, you had Anthropic shoot to the top of the App Store, dethroning ChatGPT for the very first time. And this is very much still playing out because this is what OpenAI employees are seeing as they walk into work this morning.
Right. And Dario Amodei, I believe it was on 60 Minutes, too. I mean, there's so much focus on this as a PR strategy. Absolutely brilliant. And of course, the rest of it remains to be worked out. Deirdre, for now, thanks. Appreciate it. Fascinating look outside OpenAI's headquarters there. Before the war on Iran broke out, there were mounting concerns about private credit and that defaults there could have bigger ripple effects across the financial markets. Joining us now in a first on CNBC interview is JP Morgan Chair and CEO Jamie Dimon with our very own Leslie Picker from JP Morgan's Global Leveraged Finance Conference in Miami Beach. Leslie, over to you.
Kelly, thank you so much. And thank you, Jamie, for taking the time to sit down with us. And it was a very important day. Everyone's trying to make some sense of the news over the weekend. And you've long said that the markets have underappreciated the, quote, complex geopolitical conditions. What do you make of the latest developments with Iran and the market's reaction today?
Well, first of all, hi. Hello, CNBC. Hello, Kelly. The first thing I want to say is that my heart goes out and we're praying for all our soldiers and sailors overseas and our employees. We obviously have employees in a lot of those cities. That's the most important thing. The second thing is the hope that this might lead to a long, just peace in the Middle East. I think the odds of that are higher. Tom Friedman wrote a great op-ed today. While there's risk associated with this, it's very hard to predict the ultimate outcomes. Maybe it will be a catalyst to get that done. And obviously, the sooner, the better. So, and you see what's doing in the markets, not dramatic. Economic, the economy is not often driven by something like that unless it's prolonged.
What about inflation? As people kind of think about the potential ripple effects of higher oil prices, for example, obviously today's move is just one day. Do you see a risk that this could lead to sustained inflation over the long run?
I don't think this thing in an isolated way will. I think there's some risk there's more inflation than people think, and that could be like a skunk in a party if that ever happens. Hopefully it doesn't happen, and no one actually knows. But this right now will increase gas prices a little bit. And again, if it's not prolonged, there's not going to be a major inflationary hit. Again, if it went on for a long time, that would be different.
Another concern that I've seen mentioned out there is the risk of retaliatory cyber attacks, banks being a potential target there. How concerned are you about that? I know that's something that you mentioned in your letter about a year ago.
I think the most important thing is that we keep the Western world free and safe for democracy. And people like this have gotten away literally with murder for 50 years. So that's far more important. But as a corollary to that, you got to expect there'll be cyber attacks or terrorist attacks either here or around the world. Banks may be targets, so may plenty of other people, and we always try to be prepared for that. We never try to predict when, why, where. We spend a lot of money protecting ourselves for cyber. We think it's part of our job. But I've always said I would consider that one of the highest risk banks bear. Not just the cycle, cyber.
Yes, I remember that from your letter last year. And of course, we are here at the Leveraged Finance Conference. It's the 31st annual event. So let's dig into your view on credit. Broadly, last week you said at JP Morgan's investor update that the environment reminds you of 05, 06, 07, that people are leveraging to the hill, and you see some dumb things out there happening. Where specifically are those dumb things happening?
Let me give you a better perspective. Individuals in very good shape, debt to service ratios, corporations in good shape, government is not. Governments around the world, the United States government, have far more debt than they've ever had before. You know, we're going to have a cycle one day. I think when we have the cycle, and it may be driven by geopolitics, it may not. Those geopolitical things are kind of longer tail items, and there are a lot of short-term good items. I think the one big beautiful bill help drive growth. I think deregulation of banks and other companies can help drive kind of growth. Still looking at that party may be inflation. So credit will have a normal cycle. I believe that it'll be worse than a normal one when it happens. So there will be one, and that's because of complacency. You know, asset prices are very high, credit spreads are very low. I don't think a lot of people have seen a credit cycle. Not everyone who makes loans is very good at it. So those bad actors may be banks, not private credit. It's just across the board, and we've seen, you know, issues. I wouldn't call them major issues. I wouldn't call them systemic issues, but issues of bad underwriting, and some more fraud than there should be, and things like that. So, you know, I'm concerned about it, but we're prepared for it. We always prepare for all these outcomes. We'll see. And then we obviously underwrite credit and compete. So we see people, we do that, sometimes doing things that we would never do. That's what I'm referring to. That's not private credit, that's other people providing credit who we think are just going a bridge too far, you know, to make a loan they probably shouldn't be making.
I think that's an important distinction, because with the cockroach comment as well as the comment about people doing dumb things, I think a lot of people took that to mean private credit specifically.
No, I never meant that for the cockroach comment or this thing. You know, this is underwriting standards. And not just, you know, leverage, not just EBITDA, but also, you know, assumptions you're making in revenues and expenses, you know, covenants you put in place, you know, underwriting the person you're doing business with and their history. Sometimes it's very specific things that, you know, create what you would consider a secured loan almost unsecured. You know, the ability to move assets out of a company. It's all of these things that create far more risk in that loan than we would be willing to bear.
What about private credit and software? We've seen some volatility in recent weeks. Do you think some of the recent concerns and headlines and discussions about default rates and worst case scenario is all of that warranted? And do you think it is right to be pinning that specifically on software and private credit?
I wouldn't. What I just said has nothing to do with software. It's just, you know, credit in general and prices in general and things like that. But in every credit cycle, industries go bad that you never expect, that hadn't gone bad before. So like in the year 2000, it was mom and dad dividend stocks, you know, the utilities and the telecom. In 08, it was Warren Buffett stocks, media. So this time it might be software. You know, they're part of the market. They'll, you know, maybe that cycle will be worse for software than other people. And look, it's possible that AI will attack parts of software more than people think. It's possible it's going to do other things that we haven't even thought about yet. So, you know, to me, yes, those things, when you look at risk out there, you should incorporate what are the forms of risk you didn't imagine that could be different than you thought, and can you handle it? No one can avoid a credit cycle. The question is, did you want to do a better job than everybody else when you go through one?
Lloyd Blankfein, who was CEO of Goldman Sachs when, of course,
great friend of mine, wonderful guy. Yeah.
As I expected.
Miss him.
It's nice to see him back out there. He's been talking about private credit specifically and some of the potential risks of putting private assets, private credit, into the hands of retail investors and eventually in 401ks. Do you agree with that notion that it is potentially risky and could draw undesirable attention from regulators?
So I've become of two natures, okay? You're an adult. You have the right to do what you want with your money. You have the right to smoke cigarettes. I don't think that's wise. I think these are, in some cases, more complex, and they make, you know, promises of dividends and values and stuff like that. Whenever you go to retail, so there's not a statement about private credit. Whenever you go to retail, you better have a heightened sense of what can happen. So, you know, if you have to cut a dividend and the value goes from 100 to 70, big institutions are used to that. They made those decisions. They underwrote. You know, mom and dad, they may say, wait a second, I thought you had better standards. I never knew my dividend could be cut. I was promised X. And then they start to send letters to the SEC. And the SEC has to investigate it. When they investigate it and they call their company, they're going to get emails. And inside the email is going to say, this doesn't meet the standards of JP Morgan. We really shouldn't be selling this to grandmas. And then you're in trouble. Whether those emails are right or wrong. And so, yes, you have to hide standards. But the standards could be done, we all do this a little bit. What are your standards? Do you limit it? What's the transparency? If a JP Morgan does it, we re-underwrite who's doing it. We re-underwrite the loans. So you have to, if you set the right standards, it'll be okay, or at least far better than the people who don't do it the right way. And so it's not doing it the right way will get you in trouble.
Going back to
yes, I agree with him in general. Yeah.
Yeah, no, it sounds like it. Going back to the subject of AI disintermediation, last week we saw Block lay off almost half of its workforce as a result of efficiencies it believes, or at least it says it could gain from AI. You've been worried about what you call derivative effects of replacing jobs. Do you think this is just the beginning? And if so, what do you think that would mean for the broader economy?
Yeah, so the first thing is AI is real. It's going to create a lot of great things. And I really mean it. Your kids may be working 4 days a week and their kids 3 days a week, living wonderful lives, living to 100. A lot of cancer will be cured. Accident rates in cars will drop dramatically. So let's just put it in the big picture. And companies should deploy it to do a better job for the customers. So we're not going to hesitate deploying it. We're going to have our own redeployment of people if they're displaced. And what I was mentioning there is that if it happens too quick, so most technologies took years to roll out, internet, even cars and Caterpillar tractors on farms and electricity. You got to build the whole infrastructure. This may be pretty quick adoption. So it may create some of that joblessness faster than people can retrain, move, and stuff like that. And my view is we, society, government, and business should be thinking about what can we do to get the benefits of AI and diminish those negatives if in fact they happen. I'm not saying they're happening. What I'm simply saying is like at JP Morgan, we prepare for things that may not happen. I think the government should be doing that here because there is a possibility to happen in certain job types. And then so we should have retraining, income assistance, relocation, things like that that give someone a chance at a good paying job. It's not enough to say to someone making $150,000 a year, you're out of a job, and your next job is stocking shelves at $30,000, who has a family. So I just want to be conscious about if it happens, are we prepared? And we're not yet. This is about getting schools and businesses, thinking through maybe incentives to retrain and relocate people, not just lay them off, like things like that.
As a business leader, how do you think about that? And especially as you mentioned, the technology changes so rapidly.
Yeah. We're going to adopt it ourselves. I don't worry about it at all. We are going to do it to do a better job for our customer. We're not going to put our head in the sand. And as a business, remember, we have 10% attrition a year. So, so that means effectively, over 5 or 6 years, you can cut your workforce in half just by not hiring people. And so I don't want to, but you got to be ahead of it. You can't wait, deny it, not adopt it. I have to do a good job for my customer. So we are going to prepare ourselves, and we do a lot of redeployment. We've been redeploying people for 15 years. That this job disappeared, we offer you a job over there with training. And for the most part, they take it. Every now and then they want to retire or try something different. They don't want to move or something, but we're going to do it ourselves. I just think government's got to be thinking about this too.
Yeah. You and your peers have reportedly clashed with Coinbase's Brian Armstrong over the Clarity Act and specifically this idea of crypto exchanges offering rewards for stablecoins. And Armstrong was on CNBC with Sarah Eisen a few weeks ago from Mar-a-Lago, and he said there's a path forward for the market structure bill that's a, quote, win-win outcome for everyone. How are you feeling about it right now?
Yeah, so the banks feel strongly that there should be, rewards are the same as interest. And that, a compromise would be that you could pay rewards on transactions, not balances. If you are going to be holding balances and paying interest, that's the bank. You should be regulated by a bank. So we've been firm. One thing over here, yes, but if you want to be a bank, become a bank. Then you can do whatever you want under bank law. So I remind people, and your viewers may not know, banks have restrictions and requirements. FDIC insurance, AML, BSA, we have Community Responsibility Act, which means we have to open 25% of our resident LMI neighbors. We have social requirements. We have liquidity requirements, capital requirements, transparency requirements, reporting requirements, board requirements, governance requirements. If they want to be a bank, so be it. So what we basically say is level playing field by product. It can't be you have these people doing one thing, without any regulation like that, and these people do another. And if you do that, the public will pay. It will get bad. So people should take a deep breath at what is you want, and we want competition. We're actually one of the biggest users of blockchain. And we created the JP Morgan deposit coin. We've moved money real-time payments. We're moving a lot of data now using blockchain. So we're in favor of competition, but it's got to be fair and balanced, level playing field. It can't be completely skewed.
And the risk
for the safety of the system, not just the fairness of competition.
Right. To your point about FDIC insurance.
Well, AML. What about are they? We have
money laundering. Yeah.
I say we have money laundering requirements, reporting requirements. Which I think is good. To some extent is good because you want a safe financial system as best as you can make it.
Let's dig into some of those requirements because the president, of course, is suing you and your firm for at least $5 billion over allegations that you debanked him for political reasons. You've also recently confirmed in a court filing that more than 50 of the president's accounts were closed in February of 2021. JP Morgan has also said, of course, that the suit has no merit and that you don't close accounts for political or religious reasons. So help us understand the gap there.
Yeah. Well, I mean, look, both could be true. I don't like debanking. And we debank people because it causes legal and regulatory risk for us. And reputation is a funny word because, and so is political because, you could say with Nazi party, well, we probably would have debanked you. So, but we don't do it generally for political, religious reasons, for other reasons. And sometimes we can't even tell those people there's other reasons. We have to file suspicious activity reports. And you don't make a lot of money in bank accounts. So it's been much easier for a bank to say, I'm not taking the risk. Let them go bank elsewhere. Very often the government knows much more than we know, and so I'm sympathetic, and we were quite clear. I respect the president's right to sue the company. We respect our right to defend ourselves. That's why you have courts. The case has no merit. It's going to have years of discovery type of thing, and we'll see what happens. But I agree with him. They have the right to be angry. I'd be angry too. Like, why is a bank allowed to do that? But they're forced to do it. You remember Operation Choke Point and the punishment that banks go through when they miss something or coulda, woulda, shoulda. It's all in hindsight. And so both cases are right here.
So has your process around closing accounts or anything, has it changed?
Oh yeah. Every time there are criticisms, for the laws were supposed to have changed. They didn't. But we have a second chance look now. We are much more critical. We have better reporting, as opposed to just, if it hits these terms, we debank them.
Interesting.
So, and there's a lot of detail behind that. It'll never be perfect. Sometimes we debank you because we ask you to give us information, don't give it to us, we'll just close the account. And then we call you up and say, oh, I didn't realize you were looking for me. I never saw the email. But sometimes it's, like if you are a certain type of account, we need to know your source of funds and use of funds. And if you're not going to tell us, we can't bank you. And so there are all these various things about ownership and then legal lawsuits companies have and anything that creates reputational risk for us. But we do not debank businesses in total. And so there are a lot of misunderstandings here. Hopefully the law will change and hopefully it'll get sorted out.
Yeah, well, you clarified a lot for us today. We really appreciate your time. Jamie Dimon, Chairman and CEO of JP Morgan.
Oh, thank you.
Appreciate it. Kelly, I'll send it back to you.
Leslie, Mr. Dimon, thank you very much. We really appreciate it. Of course, when people are pouring back over the banks and their exposure to private credit, JP Morgan is one of those that seems to have the least of it, but that will be a story for another day. For right now, we're still gauging the fallout from the attack in Iran over the weekend, and markets have largely shrugged it off to turn positive, although the Dow is now heading a little bit back towards session lows, down about 129 points this hour, or a third of 1%. S&P is down 8, NASDAQ is up still, and the Russell 2000 small caps are actually leading the way. A couple of quick movers to mention: the cruise operators definitely taking it on the chin today. Norwegian also gave weaker than expected guidance. That's not helping. Those shares are down 10%. Carnival, Viking, Royal Caribbean down as well. Norwegian warning the long-term effects of the spike in oil prices is uncertain. Similar story for the airlines. They also grounded thousands of flights following the strikes in Iran. United has the most international exposure of the group, but is only down 3%, where the fallout is a little bit more on the heavily leveraged players. Elsewhere, NVIDIA, $2 billion it's investing in Coherent and Lumentum. Remember, Lumentum's CEO was on this program on Friday. He said they're hiring and adding capacity and are sold out until the end of next year. And that's it for the exchange. Brian Sullivan picks up coverage with Power Lunch. I'll see you right after this quick break.
Markets were turning around, at least earlier, as the historic developments in Iran unfold, but there is a long way to go, and the risk remains high. With Kelly, I'm Brian. Thanks for watching Power Lunch, everybody. We've got everything you need to know about what is going on, including two big voices you have to hear. Halima Croft is here, along with seasoned diplomat and energy expert Amos Hochstein. They're going to lay out what really matters right now.
Plus, to make sense of the market reaction and what all of this could mean for your investments, we're joined by Jan Van Eck. He's the CEO of Van Eck, global investment firm with nearly $200 billion under management. He's going to break down where the smart money is moving, where risk is rising, what you need to know before your next trade. And yes, we'll talk some Bitcoin too. I noticed that it was up about 5% a little while ago.
Yeah, I love Jan because he can talk about everything. But let's start with the incredible news around Iran and the Middle East, because things are still developing hour by hour. Oil and natural gas prices both higher, though well off their initial highs from last night. But that bid is bringing buyers into many of the stocks as well. Exxon, Chevron, Occidental, ConocoPhillips, they're all higher. Natural gas and LNG companies also popping as Iran knocks Qatar's entire LNG production offline. Qatar, the largest LNG producing country in the world, Cheniere, Venture Global stocks, both moving higher. Venture Global up 14%. It also posted results this morning. And as the attacks continue, the focus is on building out the American defense industry with Lockheed Martin, Northrop Grumman, General Dynamics, all those stocks also being bought right now. And while the strike on Iran is considered a success by the White House, the risk far from over, as ships still remain stuck at the Strait of Hormuz, waiting for some form of all clear, waiting for safety, waiting for whatever. It's a live map. The red dots all reflect the ship. And you can see in the Strait of Hormuz,
stand still.
Stand still. Literally at anchor. Nobody is going through in either direction. And maybe also waiting for insurance to help with that and get through the 20-mile wide passage. Maybe the most dangerous waterway in the world right now. Here with us, RBC Capital Markets Global Head of Commodity Strategy, Halima Croft. I feel like that map, that Strait of Hormuz live map from marine traffic, is kind of the one thing we should all be watching.
I mean, the Strait of Hormuz is essentially a parking lot. And prior to the events over the weekend, all the scenarios were, could Iran close the Straits of Hormuz? Could they use their ships from Bandar Abbas to target tankers? They didn't really have to do that. Essentially, insurance companies decided to close the Straits of Hormuz. And so the question is, what is going to give these companies comfort that that is a safe waterway to navigate? And we have seen attacks on tankers. We have seen the Iranians, outside the S-curve, do a number of strikes on key Gulf energy producers. You mentioned Ras Laffan, like that is a major facility. Like if you had said that the Qataris, who are essentially the Switzerland of the Middle East in terms of everybody goes there to negotiate, the fact that that major facility, the largest LNG facility in the world, would be taken offline, I think that shows you that the risk profile of this conflict extending is very high.
Is this the primary way that you think Iran can now respond to the attacks? So we've seen them obviously launch a number of attacks against other countries in the region, which is now enraging them. But what other major options does it have, or is this probably the main avenue they can respond
Well, I think what's important is there are reports out now that the UAE may potentially only have 7 days of interceptors left, Qatar maybe 4, and reports that both these two key allies of the United States are potentially looking for us to strike a deal. If you target these countries, if you target their energy assets, you essentially internationalize the cost of the conflict and you raise the price. So I think that is a calculation for Iran. They're willing to have bad relations, but they're in survival mode as well. The supreme leader is gone. Many of his top lieutenants are gone. If the regime believes that this is the path to survival, I think they're willing to incur poor relations with the neighbors.
Are you surprised oil and gas are only up 6%?
I think a lot of people in this market still believe it's a short conflict. The White House, I think, has been messaging that this will be short, that they will have this under control soon. And so the question is, are we multi-day or multi-week? That cannot remain a parking lot in the Strait of Hormuz for a multi-week period and have Brent prices sitting at $78.
Well, the oil, so let's hone into that a little bit. And I spent the weekend, as we all did, working and talking to, I talked to insurance executives as well. And there is some talk that the oil has to flow. The oil has to go somewhere. It's coming out of the ground. You're not going to turn that off. So the oil is going to go into floating storage first, but then ultimately you run out of ships. It has to move. There is some talk, and I'll report it right now, that maybe there's some kind of a Ukraine-Russia-like 3-day ceasefire of sorts where oil can flow both ways. Because is it fair to say, Halima, that Iran wants to cause damage, but also Iran needs the money, don't they?
Well, let's say if you're playing for time, if Iran believes that they can use their drones and their missiles to inflict enough pain, like shock and awe, on the neighboring states that they make us stand down, I think they're willing to have a suspension of energy revenue for a period to try to change our calculations. The other thing I would say is that you say oil has to go somewhere. There are not great viable exit routes for the Strait of Hormuz. Yes, there is an east-west pipeline that Saudi could use to move 5 million barrels, but that was struck in the summer of 2019. And where is the exit for that pipeline? That basically lands you Red Sea. Who's in range? Houthi missiles for that. So again, if you ask the question of exit routes, you have to ask then, are those exit routes particularly secure?
I'm glad you brought that up. So it also sort of trying to get the visual straight. If we're hoping to starve Iran of money, for lack of a better word, that would starve those proxies like the Houthis, is that how it's going to work or no?
It's not a multi-day campaign then. And that is the question for the administration is, how long are you prepared to endure attacks on neighboring states that are our allies, and how long are you willing to endure potentially higher prices? There are real limits to what you can accomplish when it comes to regime change by air power alone. You can do decapitation, but the question is, what are our goals? And a great question for Amos Hochstein is, do they align with Israel's goals as well? Do they have more expansive goals when it comes to Iran's missile capabilities, drone capabilities, and who's in charge than we do?
What's left of their capabilities? So especially when you bring up the issue of saying, okay, Dubai or UAE may only have 7 days left of being able to defend itself. Well, how much more is in the stock?
Again, I think the important question is, do we differentiate between what's in your missile stocks? And some people will say, experts will say they maybe can do it with missiles for another month or beyond that. Their drone capabilities are substantial.
Even if we just decapitated them or no?
I mean, Kelly, like, look what they're using. They're using a lot of drones. Most of the attacks that we're talking about, Ras Laffan, those are drones.
But meaning, did we, I shouldn't have used that word, but did we, others have suggested we've taken out that drone?
We have to see, because
supply chain. Yeah.
That is, right now, no indications that I've heard anyone say that they have been seriously disabled. And the Iranians are so good at producing low-cost drones, they provide them to the Russians.
That's what Dan Clifton.
I'm going to ask Amos probably this exact same question. So Amos, if you're watching,
just to bring him out.
Here comes probably a question that's coming for you soon, which is, we don't know. Nobody knows what's next. What they do in Iran, they convene a group. They're called the Assembly of Experts. They get together and they kind of
in 40 days.
Correct. They pick a new leader. The Ayatollah Khomeini was, by all accounts, 86 years old. He may have been older. In other words,
had cancer. Yes.
Yeah. There was a natural exit plan for him outside of this. So who's next?
There were reports that he was also prepared to be martyred. Like, he did not want to be put in an orange jumpsuit and march through lower Manhattan courthouses. So, I mean, this was something that was...
A la Nicolas Maduro,
right, like
Venezuela.
Our Venezuelan leader, who's now awaiting trial. The question is, where are the redundancies in Iran? I've heard there are significant redundancies. And to the IRGC...
What does that mean, redundancy?
Basically, who do you go to next? So essentially, they have a battle plan, at least for the IRGC, where you take out top ranks, you have people ready to step up. Question for the Supreme Leader is, does the IRGC even really want a Supreme Leader? Are we looking at an IRGC-led government going forward? Do we even...
A full junta? Like a full military...
A full IRGC-controlled government that might be even more hardline? Do we have a sort of maybe a chaotic situation, contest for power? I think all of those things we have to take into account. And then, of course, where is the Iranian opposition? I mean, President Trump has said, we're waiting for you. Now's your moment. Is there any signs that somebody is going to be able to step forward?
This National Council of Resistance, Mariam Rajavi, is, they've been putting out some ads and so forth. They're again, there's not a great institutional history to draw upon to try to make this kind of change. So the odds would be against them, I would think.
I mean, the concerning reports that we hear from experts is that, the scenarios that people are thinking about is trying to find a Delcy Rodriguez in the Revolutionary Guard. Like, that may be how President Trump basically declares victory.
Somebody who doesn't like us but would work with us. Darcy Rodriguez probably does not like us, but she'll work with us. Let me.
And she'll take a check.
And she'll take. That's. I wouldn't. You're the most direct person I know, and I wouldn't have it any other way. Let me throw this at you because I would brand this as an RBI, but it's too serious. But this is insane. I don't know if you guys realize this. With this oil move, it's not even a top 25% oil move ever. Now, we just killed the leader of Iran and some of his top lieutenants, and we don't get a top 25 oil move percentage. I thought that would happen, but because there's a lot of oil right now. But are you surprised by this?
I think what is interesting is that if this had been pre-shale revolution, we'd be in such a higher price point. So I think some of it is the abundant supply in the United States has given us comfort that we are well supplied. I don't think we have a lot of OPEC shock absorbers, though, if we get a physical market disruption. The real question, though, is did market participants basically over the weekend say, this is going to be a short war, it's shock and awe, but this will be over in a week? If you think it's going to be over in a week, this move makes sense. If you think that this is multi-week, multi-month, and cascading outages, you have to be thinking about a higher price environment. So duration will absolutely be key.
And just quickly, when we say over, the real thing that I think the oil markets care about, but I'm not sure, is whether they can get through the Strait of Hormuz. Is that should we equate those two?
Strait of Hormuz, obviously, because that is 20% of oil going through there, LNG going through there. But also they will be watching, is there another Abqaiq attack looming? That was the attack in 2019.
Which is, by the way, the single biggest day move in the price of oil in the last 30 years. Oil's up 15% that day.
And the Saudis were very good at honoring customer commitments. They basically ensured that there was no disruption, but they had available sea lanes.
So if, in other words, it's one thing for the president to get there and say it's over, but really the way the market perceives that it's over is free-flowing through the Strait.
Free-flowing oil and essentially statements that, very similar to almost Venezuela, like, we're ready to work with the United States. If you basically have some type of resolution at the end where someone comes forward in the IRGC or whoever is in charge and says, we're done, like in June. Remember in June, essentially, we had the wind down and everyone's like, we're going back to our corners?
Yeah. And we had Brent at 78. We're not even at 78 right now. We're below that point, and yet we.
The last thing I would say, do we have recency bias?
Yeah.
Because of the way June occurred and there was no disruption, are we using the June playbook?
Halima, always great to get your insight. As usual, important times. Thank you.
Thank you so much.
Yeah, thank you very much. We're just getting started here. Don't go anywhere. Stocks are off session lows. NASDAQ is positive. A lot of questions still to be answered, though, as you just heard. Energy, defense, crypto, that's where you're seeing most of the green today. We'll talk the Mideast impact on the markets more broadly with Jan Van Ack right after this. Want to take a look at the markets, which have been fluctuating, but the biggest story is that we went from declines last night and this morning to what we're seeing now, which is almost universally green on your screen there. The Dow's down 25 points right now. The Nasdaq's up 0.5%. The S&P is positive by 11 points, all rebounding from initially trading lower as the U.S.-Iran conflict enters a third day. Here for more on how investors should position and think about these escalating geopolitical risks is Jan Van Eck. He is the CEO of Van Eck Funds. It's great to see you.
Good to see you, Kelly.
Halima just was talking there about China and the kind of knock-on effect this could have and whether they've been, as Doug Burgum said, stockpiling to maybe be ready for a scenario like this. And what would you be kind of following there?
Yeah, I mean, there's one concept or one dimension of this that no one seemingly has mentioned, which is Karg Island. What's Karg Island, right? It's where 90% of Iran's oil gets exported out of. That is a choke point. And if you think of Trump just follows the same playbook that he did in Venezuela, what did he do? He cut off their oil exports, their hard currency. And I think he's going to want that leverage point going forward, because we were talking about succession, what happens in Iran, no one knows. But boy, if you control their oil exports, and then the second point, China, bringing that in, where did 80 to 90% of Venezuelan oil exports go? China. Yeah. Where does 80 to 90% of Iranian oil exports go? China. So it's really amazing they're not more involved, I guess. I think they're thinking a lot about what's going on. But the consequences, I think, if we get control over the finances and the oil exports, that would be a major military objective that we're not talking about.
Control of Iran's oil. I mean, that's
how would they do that?
It all goes through Karg Island.
Yeah.
So
yeah,
like,
it's 90% of their exports. The floating island loading terminal off the coast inside the Persian Gulf. They got a little thing on the other side in the Gulf of Oman. But how would we take that over?
I'm not a military planner. All I'm saying is that I think if you're thinking about this being a permanent demilitarization of Iran, you want to control the money flow. And that's the money flow.
And so for China, which has about 17% of its oil supplies come from Venezuela and Iran, we're told. So it's not existential, but it's problematic. And we have this big meeting coming up between China's leader and Trump in a couple of weeks. And could that be a moment that the U.S. has built up enough leverage that they kind of walk away from this in a mutually agreeable position instead of the position where China's talking to the U.S. about its plans with Taiwan or something like that?
It gives Trump a lot more negotiating power, and I don't think he has to use it, right? He said that in Venezuela, we'll sell oil to whomever, but we want to make sure it's going to peaceful people in Iran. I would think that that's an objective. It's speculation.
No, but we're all speculating. As an industry executive I spoke with this weekend said to me, if you tell me who's running Iran, I'll tell you where things go, because nobody actually knows. It could be somebody who's more antagonistic to the U.S. and the West, okay? Or it could be somebody who's a little more friendly to the U.S. and the West. Maybe wants to make a deal, end the nuclear program. Suddenly Iran's exporting 3 million barrels a day, not 1.5, and the price of oil actually goes down. How much of all of what we're doing right now is trying to figure out what they're going to do in Tehran? Because if you know, tell me.
I'm not sure it matters, right? If they are demilitarized, if they have no functioning Navy, Army, missiles, drone manufacturing, whatever, then kind of who cares, right? So anyway, listen, I think as far as the markets are concerned, oil and gold, if I can turn to that maybe, I think oil was oversupplied coming into this year. We're looking in the second half. We were bullish because basically the shale production can't be increasing the way it has, keeping up with global growth. That's why OIH is up 37% this year. Wow. So I think a lot, right? Energy is the best performing sector in the market. I think so. That's all kind of priced in. It explains why Halima was talking about China building inventories in this more fully supplied market. Because if we're right that it's going to be tighter at the end of the year, that's just prudent.
Yeah,
prudent
maybe a little
stockpiling.
less shale on the margin, and so you get a little bit higher oil price once we even move past this conflict. And then what about gold?
Yeah, gold. I think for me, I've been, I'm very bullish gold for multiple years because I say it's becoming the world's next kind of international currency. People want to control it. And so I don't think a geopolitical event like this is what drives gold, nor does U.S.-centric things like inflation. I think that's missing the narrative. The narrative is people want control over their own money. This is a reminder, yes, but it's not geopolitical risk.
You referenced the OIH, which happens to be known as the Van Eck Oil Services ETF. I don't know if you know this Van Eck guy, but he's something. So that index down a little bit today, but who cares? Up 38% this year, even with $66 oil.
Right.
ExxonMobil soaring, Chevron soaring, ConocoPhillips soaring. Are you surprised that those stocks have been so strong, given we don't have $95 oil, we have $65 oil?
No, but markets predict these tighter markets in the second half of the year for oil. So no, am I surprised? No, not at all. You know, now they're kind of rich now. So I'm not saying like pile in because we're in inning one of this trend. I think we're further into it than that.
I just want to mention, if you're right, there is going to be a problem for the U.S. economy. Now, again, maybe we're helped by the production of it, but if we are living through something like we were in the early 2000s, when the oil price went to 140 and the price of nat gas went everything, because we were in a capex cycle, molecules were in short supply, and everybody wanted them, you know, that's not a great scenario.
Yeah, I mean, listen, everything to me is the AI trade, and we call it AI 2.0 trade. We need more electricity in the United States, but that's more a nat gas story than it is an oil story. Not saying that that's the only part of the economy that matters, but nat gas is basically free in the United States.
It is.
So much of it.
I know we have to go, but Kelly made it a very, very important point with Halima, and we're talking about these knock-on effects of commodity prices. Let me just frame something very quickly with you. If everything's about the AI trade, and I don't disagree with you, okay, and AI is largely powered by natural gas, what if natural gas goes to 10 or 15 bucks because Iran keeps bombing Qatar
or the ships can't get out,
or the LNG can't get out?
We don't need Mideast
Can the
gas.
AI trade still do well if natural gas prices stay high for long?
Yes. We have so much gas in the United States, we're exporting it. I mean, maybe we export less, but I can't believe that those prices for a long period of time in the U.S.
And that would be the biggest difference if our supply means that we don't experience the bad part of that 2000s run up, but that investors can get all the good part. We're in the sweet spot right now, you know, where they enjoy the gains without too much knock-on effect. So, Jan, don't go too far. We're going to bring you back, okay? Jan Van Eck, we'll see you later this hour. We have a news alert from the White House. Eamon Javers, what's happening?
Kelly, this is a story broken by the Wall Street Journal just in the past couple of moments. The Journal reporting that the Trump administration Department of Justice is now prepared to drop its defense of the president's executive orders against a number of prominent law firms. You remember those executive orders last year really roiling the legal landscape as the president sought to remove security clearances and government contracts from firms that he perceived to be either on the other side of the aisle or operating against his administration. Now, some of the firms affected here, according to the Wall Street Journal, would be Jenner and Block, Wilmer Hale, Perkins Coie, and Sussman Godfrey, according to the Wall Street Journal, that is. We don't have official confirmation of that today from the Department of Justice or from the White House, but it would seem, Kelly, that if there are going to be filings from the Department of Justice dropping those defenses, we could see those as early as this afternoon in court records. So we'll keep an eye out for that and for some legal reasoning from the Department of Justice as to why they're dropping the president's cases there. Back over to you.
All right, Eamon, thank you very much. And we should mention the Dow has now joined the S&P and the NASDAQ in positive territory this afternoon. Dow is now up about 6 points.
I want to talk about last night when we had trades go live at 6 p.m. Eastern time. We were on live, CNBC Asia, all our colleagues over there. The Dow was down a couple hundred points. NASDAQ was down 1.5%. Oil prices up 13%. Here we are. Oil's barely higher.
Not even 24 hours
And the
later.
Markets are up.
Yeah, incredible. Well, because that early reaction told you, usually the first reaction is the worst reaction. And if the worst that it was, you know, a couple hundred points down on the Dow, it didn't take much for markets to come back. Keep an eye, though, on the opposite side of this. 10-year going back above 4%. Bad prices paid in the ISM report this morning. So it's like we're in the sweet spot right now, right before we might turn our attention to more of the inflation
So could we do what Jan was saying? Could we do something with Iran's exports in a good or bad way? We don't know. But coming up, somebody who probably does. He's an insider who predicted these attacks on Iran back in January. His thoughts on the likely next steps now. What happens next? It is Amos Hochstein. He knows a lot. You're going to want to hear what he has to say. That's next. All right, welcome back. And as we said, the markets, all three major indexes are now higher. Crypto is higher. Oil and gas also higher. That is not a surprise. So let's now try to answer some of the questions that many of you no doubt are asking after the U.S. strikes on Iran. What happens now for Iran? What happens now in the broader Middle East? Will this escalate? Is there an off-ramp? There's a lot of questions. Let's get some answers with somebody who's been right at the center of all the high-stakes diplomacy in the region. Joining us now is Amos Hochstein. He is managing partner at TWG Global, also a former senior Biden advisor who negotiated directly with Middle East leaders and some not so nice people on some of the region's most sensitive issues. So, Amos, really a pleasure to have you on. What is, as you see it, and I know there's a lot of speculation that goes into this, the off-ramp here? What's the end game?
Hey, Brian, it's really great to be with you. Look, the off-ramp is clear. Is there a new regime that comes? Who's in charge of Iran? Nobody knows the answer to that question now because the Iranians are trying to figure that out for themselves. You have the Ali Larijani, you have a few others. The IRGC is trying to figure out, are they going to be the power player here? But somebody's going to emerge as the leader that will be selected by the internal chaos that's happening inside Iran. Once they figure that out, you can start talking about what's an off-ramp. And the off-ramp is, one, do you have a new leadership that says we are no longer interested in nuclear weapons, we're no longer interested in exporting violence to the proxies around the region. We may not be pro-America, pro-West, but we're not really going to be pursuing the same objectives as we were before, and then you get to an end of this conflict. Or does Israel or the United States say, no, we need to have a sort of hand-picked leader like Venezuela with Delcy? That's a lot harder to see in the context of Iran. The third option is that without troops on the ground and an actual occupation of Iran, very hard to imagine, or it's easy to imagine a chaotic situation where you have a number of centers of power that emerge. And that's similar to what we have in Libya, right? A government that's essentially in the east, in Benghazi, another government that is in Tripoli, and then tribal powers that are in between. That could happen as well. That's why it's so fluid now. And I look at all these people predicting what's going to happen. I don't think anybody knows what happens.
And Amos, Halima told us to ask you the following question, which is an excellent one. I want to ask you now. What do you think Israel, those three scenarios, which is they pick their leader, there's a kind of a Delcy type, or there's a tribal kind of result here. What do you think is Israel's goal here? And is Israel and the U.S. Aligned in the same end goal here, or might they have a broader one?
Israel is much more prescriptive of what they want, which they don't say publicly, but what they're looking for is a regime that they can work with. They're not likely to be all that enamored with someone who is associated with the current regime saying the right words because they won't trust it. They would like to see a opposition figure, even though there's no such thing as the opposition in Iran, but someone who is really going to say, I'm going to renew relations with Israel, I'll have a good relationship with the White House. That's what they really want. I'm not sure that that's what the Trump administration will see as the only end goal.
But Amos, doesn't Israel itself know that that there is no existing alternative to either the theocracy, I guess you'd call it, or the monarchy that was in place before? Now, there is this National Council of Resistance with Maryam Rajavi, and maybe, but they're building from the ground. How do you dislodge the entire kind of clerical regime that has ruled the country for 40 plus years?
Well, first, Maryam Rajavi was a designated terrorist in the U.S. by the U.S. government and U.S. intelligence agency. So I don't know that they are all that welcomed by the Iranian protesters. That's not who they're looking for. I think that you're right on the base of the question. The Israelis have a tendency to be very, of late, and even historically, of being very good at dismantling, decapitating, and destroying some of their enemies. Not as good a track record when it comes to putting together an opposition that will be in charge. Look at Gaza, look at Lebanon, et cetera, where that's always been, has never worked out all that well. And I think it's very difficult to do that, even when you do have occupying forces the way we did in Iraq, let alone if you're doing this from the air. And I think that's where you may get to divergent interest between Israel and the United States as to when to end this. and you've been talking about the oil prices. Look, don't underestimate what that could mean for American decision making, and don't take the first day or two as an indicator either. Remember that after the day of the Russian invasion to Ukraine, oil prices went up less than 5%, 3.5%, 4%. And that was in a very tight oil market. But fast forward 2 months, when things lasted a lot longer than people expected, oil went to 124 from 100.
Is that possible here? Is that possible here?
100%. I think we're discounting a number of. The Iranians still have tools. They hit the LNG terminal. They hit the refinery in Saudi. What if it wasn't a refinery, but a production site? The minute you do that, you know this, Brian, panic ensues. So for now, oil prices are going up not that much because they went up, 15% over the last month in anticipation of this. So a lot was priced in already. We were at $60 Brent or 58, and now we're at 77. But that's without any real physical damage and only insurance damage. But if you get to a strike that actually takes something out, and people see on TV, traders are starting to see flames on TV, it always changes. It doesn't always have to happen on the first day, but it's about how long does this last. So, and what is the Iranian capacity to lengthen this conflict and to continue to inflict damage? So far, they can inflict damage in the Gulf. So we'll have to see about that.
Yeah. So let's very quickly, I want to end with the Strait of Hormuz. I know we've focused a lot on this, but you would agree, and our viewers know, that this is the critical choke point for not just oil. And I want to be clear, it's not just about oil. We're looking at a live map, all little red dots and arrows. Those are oil, gas, or chemical tankers. It's not just a choke point for oil, as you know, Amos. It is natural gas. It is also chemicals and fertilizers. 30% of the world's chemical fertilizers, ureas, phosphates, whatever, they go through there as well. So people, it matters a lot to eating. So if you were still in the White House, what would the recommendation be to get this flowing again? Would it be some kind of U.S. naval escort through it? Would it be try to get the insurers to agree to something, some kind of a multi-day potential ceasefire? How do we get those ships moving again?
So it's a great point, because that's what I'd be watching right now really carefully. And that's what we did ahead of the Russian invasion when oil prices, increased, or after Libya in 2011. I think you have to look at a couple of things. One, right now, the Iranians cannot close the Strait of Hormuz physically, but you don't need that. You need the insurance companies to not put a ban on traveling through. So I think I would look, and the SPR doesn't help you all that much if you're going to be blocking 25 to 30% of oil flow worldwide, right? So I think what you need to do is look at what are the alternatives to put pressure on the insurance companies. Are there financial guarantees that I can work with the tanker companies to be able to get them to start moving again? Because I need to get momentum that at least if some tankers start to go through and nothing happens, and we can get some momentum of clearing one lane, talking to the Department of Defense to make sure that we put some air defense against missiles and UAVs specific to that area. Just like we're defending our bases, we should be defending that choke point. So I would start looking. I wouldn't implement anything today. I'd wait a couple of days and see how this develops. But if I have to, don't wait too long if you're the White House, because if the market decides this is going on too long, that I have a physical shortage in the market now, this could be a runaway train that goes from, oh, it's only up a couple of bucks to it's up $25.
Mistake, Amos, to I won't use the word drain, to not have a